Okay, welcome everybody. Subio, nice to see you. Nice to see everybody. Kim went through this already, so I won't spend too much time doing that. I had a couple things I wanted to talk about and show some letters that I got. A lot of nice emails. Listen, whoever sent me homework at 5:45, not going to get checked right before class. Come on, man. The cutoff for homework needs to be 4 p.m. Eastern time. All right, so I at least have an hour or so to look at it. The guys that got it overnight, thank you. I spent all night looking at it, going through my emails. And keep an eye on the charts. Some great setups last night. I'm going to point out a couple of letters that were really cool. I cut out the email address on this one. This gentleman was following Euro CHF, which was fantastic. It had a couple 3 days down. Very nice spike to the low at the end of the U.S. session. It came back and hit it again right at the London Open. I got some snapshots of it. We'll look at it. But he figured they would push it to the ADR. They did. Looking at the Mayo, I took it there for 252 pips. I see how smaller traders had their buy orders just above the quarter wood, which is a consolidation or accumulation zone in the market. They wanted to trigger them orders long, and I said I bet they will reverse better than 30 pips to take a lot of them before the continuation. Look, I don't know if you can see that on my screen. Homework's still coming in. Shame on you guys. All right. Anyway, this was a nice trade, 252 pips. Great job. You know who this is. This is from Dave McCoy. He's the real McCoy. I joked around. He's turned the corner. He's been around me a little while. Met him in Orlando, a fantastic guy, an eye doctor, but I'm still blind. He didn't help my vision. I don't know what's going on over there. He took EU short. Reversal got his 50 pips. EJ got 50 pips. GJ got 65 pips on the same setup as EJ. Fantastic night, Dave. Proud of you, buddy. Glad to see this. And this is from Murray, I think. I finally turned the corner, not falling for the stupid circular and counter trend trades. I wanted you to see that and perhaps comment tonight on 2 trades I posted in the forum earlier. Haven't had a chance, buddy. I'll look at it later. I increased my demo account 25% in 2 trades with about 2% risk per trade, no fear. Would have put 10 standards on them. That's how certain he was of the setups. Fantastic stuff. Great to hear it. Some of the markups, Lisa Stewart, if you're here, this is an excellent markup. Proud of you. Great job. This is what your markup should look like. A lot of you, it did not. No problem. This is what it's supposed to look like. Okay, here's another one. The name fell off, and I'm sorry. I don't know who I dragged this email out of, and there were so many emails I couldn't go back. If this is yours, great job. Fess up. Let me know. You should be proud of it. I'm sorry. I won't make that mistake again. I dragged it to my desktop, closed the email, and couldn't remember where the hell it came from. Sorry about that. But this is an excellent markup also, okay? Some of the people asked me the trade that I was eating at, having dinner at the Columbia, and missed it, the one that Rick grabbed. Yeah, can you guys see this? It says some people say they can't see my screen. I didn't ask if everyone can hear and see. Should not be a blue screen. Okay, good, good. John, reboot, refresh, download Java. That's the 3 solutions. Look. Come in and out, reboot your computer, and make sure you have the most recent version of Java. Okay, thanks, Asubio. Good stuff. All right, look, they set the low here. This is GJ, pound yen. The trade was better actually in EJ, but they both set up identical. Okay? They have the low formed, they pull away the whole session, and they come back and nail it again. Okay, what I want you to see is variations on the theme. They hit the same thing 3 times, right to the 4-hour mark. An easy grab out in 3 bars. Okay, this is EJ, Euro Yen, which is the same setup, but I want you to see how the second leg, let me grab my marker, sorry about that. The second leg came in here. See the blue tracer right there where I drew the yellow line? The second leg came right down to the previous level, open the spread, pick up the orders, and got the hell out of there quick. Your entry is right here, and in 3 or 4 bars, you're up big. There's absolutely no pain or no drawdown in that trade. Right? I know I told you that in the thing, and you called bullshit on me, told me I'm crazy. I promise you, in 30 minutes, you were up big, and there was no pain on that trade. You'll start to recognize these things. The market maker does the same crap over and over. That's all he's got. He can hit your stops up or down, change the direction that he moves off of one of these formations once he catches the retail traders going the wrong way. Once you understand this, the game is 90% over in your favor. Okay? Understand it's just variations on a theme. He'll make deeper stop hunts or deeper vector candles to try to trick you, to make you perceive momentum. All right, this is hilarious to me. I don't trade the Turkish lira / Japanese yen, but people say, can you trade this in every pair, anytime, any place? The answer is yes. Look at this pair right here. It's the Japanese yen, Turkish lira. When's the last time you ever looked at that pair? I know, me either, except today. There's your vector, 3 to the high, 4-hour resistance. They pull down, consolidate. There's shift the zone. There's your entry. There's your U.S. reversal, W formation, back to the watermark. Hilarious. To me, anyway. It's in there. Turkish lira, Japanese yen. This is a repeat of what happened last night. Here's your consolidation zone. This happened in euro. This was a few weeks ago. There's your stop hunt low. There's your vector, 3 to the low. 3 swipes at the low in the shadow box. There's your entry. No pain on the trade, except the spread. The spread's brutal on that pair. Straight green candles rise right past the mayonnaise. And notice in here how they come back, test the mayonnaise, and continue on. They test those points because people trade the average or moving average crossovers. So those points have to be tested. If you know better, know where you are in the cycle, you won't fall for it. I think Tony T sent me a slide where he tried to short something similar to this. Tony, you got to know where you are in the cycle. You tried to short level 1 consolidation after the peak. All right, I know it's a mistake a lot of you make. You need to understand the shadow boxes, the timings, where you are in the cycle to not fall for those type of things. Okay, I showed you Turkish lira. Here's last night. Okay, Euro CHF. This is the one I was looking for. Euro CHF, look. It's been dropping tremendously. I think it fell over 800 pips. Stop hunt right out of the box. There's your consolidation. There's your railroad tracks to the low. At the appropriate time, that trade was painless. You were out in about 40 minutes or less. 35 minutes. It was over. Second bar, not 1 ounce of drawdown. The spread was the drawdown. In profit immediately. Stop loss goes below the low. That's a beautiful trade. Coming off, this is, look, pay attention. Let me toggle this so it goes away. A big, fat W right in your face. There's the entrance. The entry, right? See it? GBP CHF, Euro CHF, all the same. Okay, this is Euro CHF. The only difference, the spike came at the changeover. See it? The spike came 5:15, 5:30. They held it. It was a little bit later. It was a little bit behind the other pair. No big deal. But don't you see what's in here? You have your drop. 1, 2, 3 intraday. 3 levels of drop. Spike the low aggressively. Repeat the level at the London Open. They come back. They fail to take out the low. Look very closely right here. Right there, let me draw a big fat arrow for you. See the blue tracer in there, light blue tracer? When they pin the light blue tracer, that is evidence that they are picking up the orders on the other side of yesterday's low. But they do this by opening the spread and not releasing other traders. They're stuck -5, -2. Have you ever been in a trade where you get really close to getting out, -5, -7, you think you're out, and all of a sudden they shift it away from you? Right? Has that happened to you before? Of course it has. They know this. They come into the same levels, spike it, open the spread, pick up the orders, and they get the hell out of there. Look how quick this trade went into profit, and they got out of there. This was a 200 pip rise straight before you had the first level of consolidation stutter. Notice where it stutters. At the 200. Why? Because traders probably tried to play the bounce short on the 200 EMA, which is crap. The signals, the pins to the mayonnaise and the shark fins and all the stuff I'm going to cover are meaningless unless you understand where you are in the cycle and know. If they pin to the mayonnaise as a stop hunt, that's a setup. If they pin to the mayonnaise after the stop hunt in the middle of the run, it's a different story. Stuff I'm going to talk about, variations on the theme, understanding where you are in the cycle. Okay? A lot of you wrote this to me. Someone said in the letter I wasn't supposed to trade, but I did. Sorry, but I couldn't help myself. I saw this and I about fell out of my chair. I love emails like that, but even though you should just be observing, not trading, that's fine. But it was kind of easy last night. Every major did this setup after the drop, after the correction. Why? They let out their money. They let out their money. They let out their money. Man, we're running low. Let's correct against the trend. Let's rise price against the downtrend to get our money back. Understand, start thinking like a market maker and stop thinking like a retail trader following the technicals that everybody else sees on the chart. When you see something so obvious that it's a downtrend, you need to start thinking, apply the brakes and look for the reversal. This can be hidden behind news, can be hidden behind any geopolitical event, any garbage, the debt ceiling, they blame it on anything. Anything that's out there, they'll blame it on. That is on purpose. They create an attitude or a sentiment about the market. The Eurozone's crap. Euro's going to correct. Euro's going to correct. Out of nowhere, Euro rises. Understand this is on purpose, and it's to get you to chase the wrong directional move. All right? No, I don't want to offend the guy. I took the email out. This was the worst email I got. Didn't I spend 20 minutes talking about this clock being a piece of crap? No offense to the guy that sent it. I'm not mad at you. I'm just mad that you didn't pay attention enough for me to tell you that these session times are shit. I told you the times I gave you on the slide are solid gold. Everything else that's out there is propaganda to keep you trading incorrectly. This slide comes from people's inability to understand the session changeovers. If you sent it, I'm not yelling at you. All right? Do not use this clock. Use the times I gave you. There's a script in the forum to ping your broker server and get the GMT offsets for the server. I think Gary put it in there. That's what I want you to use, all right? And if I misunderstood why you sent this to me, I'm sorry, but this like broke my heart. I spent an hour talking about time ribbon matching up, going over the times, everything else is crap, and then I opened the email and saw this clock. I fell out of my chair for once. All right? Okay, let's see. All right, let's get these photos out of here, and I'll get into the slides. We'll get caught up where we were. It's taking me a second. All right. Some of your markups were not as good as this, and I'm not picking on anybody. I just want you to get it right. It's important. We're going to do some training on how to do the homework, but this is the kind of markup stuff that we're looking for. Get the times, the shift bars. Today I'll make a list of the things that we talk about that you should be looking for. Okay? All right, let me get caught up. You guys are not taking a break that fast. All right. We're going to talk about the trading zone and how it's set. All right? I'll take questions at the end of the class. Just relax. Open your mind. Enjoy yourself. I see a lot of stuff flying by. We'll talk about the setups. Let's talk about the trading zone, how things are set up. Don't worry about the charts right now. Just try to open your mind to the concepts. It's coming. Relax. We'll get there. Okay? All right, the trading zone. I want you to learn how to identify the key points on the chart where you can safely enter into trades. That is going to answer your question about the M's and the W formations. Relax. The highest probability setups that will allow you to become most profitable. I didn't say profitable. I said most profitable. I want you to nail this. 8 out of 9. 8 out of 10. That's the kind of success rate I want you to have, hit rate. Okay, so let's go over it. The ideal Asian range is 50 pips or less, right? Tokyo channel, for you guys to know what that is. All right, some people are saying they cannot see that. Barbara, can you? There's a slide up there. If you're having technical problems, my slides are up. I know my mic's working. If you're having technical problems, you need to log out, log back in. Make sure you have the latest version of Java. All right? Okay, Ben, good. Thank you, Adam. Thank you. All right. Ideal Asian range, less than 50 pips. If it's bigger than 50 pips, I'll show you how to handle that. The trading zone is set 25 to 50 pips higher or lower than the Asian range. Okay, Jose will talk about it. The Asian range sometimes gets blown out 100, 125 pips. You must then reconsolidate the last quarter to 1/3 of the box and understand the next possible advance or move. How do we do that? Okay. If the Asian range spikes down, the next likely move, if you have a 100, 150 pip news release, the next likely move is at the London Open second leg formation rise. If price spikes up 100 pips plus, depending on the ADR of the pair, the next likely move is stop hunt high drop. Okay? The new guys, I want you to practice in a good Asian range. So what I'm telling you is if you come to your terminal and the Asian range is blown out and you can't see where to reconsolidate it, that's a pass on that currency. Okay? Don't trade that pair if the Asian channel, Tokyo channel is blown out. The setup can occur in the last quarter to just outside the blue box. If the move comes a little bit earlier, and it does, and it will, you are smarter than a blue box. Understand what happened. The move came earlier, the high was formed, they made the second leg, repeat the level, but didn't break it. Understand this, it is still tradable. Okay, am I going too fast? Am I pacing just right? I'm jacked up today. Okay, thank you. Okay, this is what your zone looks like. Now, you know we've put the gray boxes in here, but the problem is I want you to learn without the gray boxes. I want you to understand what you're looking at. I don't want you to look at a box and go, yeah, if it hits the box, I take it. That's not what we're doing here. I want you to conceptualize what these guys do and completely understand and immerse yourself in their behaviors, and you'll be able to walk up to a chart at any point in time and take a trade. Okay, so now, the setup occurs in the last 1/3 to 1/4 of this box. Okay, so remember the little story? They set the high and low at 5 p.m. They trade in between the range. They get right before the London session. They open the swing, and then they will make the aggressive move 25 to 50 pips in 3 swipes to form out the stop hunt. They will then pull back and go into contract accumulation mode, right? Validating all the stuff you read in the textbooks to make you continue short. They will then make the second pass. The second pass can take out the first pass as long as it closes on a pin. If it does not close on a pin, it must railroad track. It must go down, do some damage, and come right back up. Close on a pin is a spike or a hammer bar that looks like that. I'll show you pictures of the bars. Just write down the notes. Close on a pin. Okay, here's what I'm talking about. Let me toggle these and give you a clean slate. Okay, here we go. Market maker set the high and low, trade in between the range, don't allow traders to get out. The last 1/3 to 1/4 of the box, they will widen the swing to pick up the pendings and snag the breakout traders and mess up their week. They will then make 3 moves to the low. And I'm going to cover that in detail today. 1, 2, 3 to the low. They will then pull back quickly and accumulate. This move out of the box, measured from the bottom of the range or the top of the range, must be 25 to 50 pips. If there was a textbook, this is the example that would be in the textbook. Are they going to hit it exactly? No. We know that the pound crosses do 50 pip stop hunts on average. We know Australian and Canadian does 20 to 25 pips on average, as high as 30. If you guys don't bite, they'll run it to 50. I'm going to cover this, but I want you to understand it and hear it. Okay? Think about every textbook you ever read. Where do you put your stop? 7 to 10 pips below the entry bar. 25 pips below the entry. 30 pips. 50 max. You think that they haven't read that book or heard this crap? They know exactly where the stops are and located by the retail traders. That's why they knock them out. So simple. Okay? Coke, I think it's kind of funny that you tell me to drink Coke when your name's Coke. I think it's great. Okay, look. So now, they spike the low in 3 swipes. Right out of the box. The distance is measured from the bottom of the box to this level right here. Okay? That's how we measure. If you reconsolidate outside the box, then you must measure from your swing low, to coin a term from my friend Craig, you must reissue the box yourself. Just draw the lines from one swing low to the other swing high. That becomes your range. All right, I'll draw that example in a minute. Market makers will consolidate off of the low. The last leg of the swipe to the low may look like an outside bar. Okay? Now, how do you know it's an outside bar? Because they're consolidating off of the low of the day to trap the traders that are already down there and to validate the textbook technicals to go the wrong way. Okay? That's what's going on. Now, the second pass comes in last night. It was ideal because it went right to the same level. And the pin, whoever asked me about the pin, was thrown down there to pick up the orders. Okay? Understand? Immediately, they came out of the zone. That's the formation of your W. You have a lot of things going on here to confirm the trade. As soon as they do the work and trap the traders, they want to create fear, greed, and panic in the market. That's their job. Their job is to keep you stunned and scared. And for 80% of the traders, I'm guessing, I don't know the number, it works. A lot of people say, man, I'm scared of this when I take an order. I'm not sure if it's right. I'm nervous the whole time. I look at my screen every 5 minutes. You are going to learn that when you get this thing right, it's over quick, and you can get on with your day and your life. You'll grab 50 pips in the blink of an eye, 45 minutes to an hour. No more nursing a trade and sitting there all night going, I don't understand why it didn't pay. Anybody remember the scratch-out limit? You take an auto stop yourself, or you take a self-stop? Anybody? Tell me the number. Thank you. 2 hours. Auto scratch-out, 2 hours. If you are not in substantial profit in 2 hours, scratch out. Why? They're holding the consolidation level to get more contracts. The straddle they were hoping for was not achieved. Okay, let's take that a step further. Gap time's over at the end of the box right here, right? The guy comes in. He tells him, hey, what's up, man? You know what? I got a boatload of traders trapped down there, about 500 million, 50 pips off of the low, Tokyo channel. So what do you want me to do? Go down there and get it. I think we can pick up 500 million on the stop, and it only costs us 100 million to get down there. Okay. That's the target, right? So now, guy comes on, London Open, pick up the breakout traders, widen the swing, get pennies on both sides, drag the market down to 50 pips below the bottom of the channel, hit all the stop-out orders of the long holders, induce people to take the short, drag the breakout traders that lifted their stop against them, snag them in position. Now, I'm down there. I'm expecting to accumulate 500 million at 50 pips below the Asian channel. My numbers didn't work out, man. Something happened. The traders didn't fall for it. I'm only about 250 million right now. My boss is going to be pissed. What's my next move? We know that the stops are triggered in 25 to 50 pip increments. I didn't achieve my target. There goes my freaking bonus this week. What do I got to do? I got to convince you that the direction is short. How do I do that? I hit it again, 25 to 50 pips lower. I'll consolidate for up to 2 hours. If I don't get the numbers that I was assigned or told I need, I can't just come up empty-handed. There's too much money involved for me to come up empty-handed. They're not in the business of coming up empty-handed. So what do? They attack the next level and cut this level 25 to 50 pips lower. Why 25 to 50 pips? Because it'll convince you, number one, that that's the direction. And number two, it'll hit the stop losses of the people that got it right, that were long. Then the same exact behavior will be seen. Usually, if they go over 2 hours and don't move, it becomes a 50-50 proposition. We are not in the 50-50 business. We are in the 8 out of 10, 9 out of 10 business. So what I'm telling you is that if you take a trade and it does not move into profit immediately like last night's setups, your job is to closely monitor the trade for the 2-hour stop clock, put a timer on, set an alarm clock, whatever you need to do. And if you're -7, +5, scratch yourself out. Because the criteria or the setup has broken down, and I don't want you hanging around for a 50-50 shot. There's going to be times when you say, "Oh, Steve, it went my way." And I'm going to say, yeah, they did, but they could have just as easily went the other way. When they hold this level for more than 2 hours, something else is going on. They don't have the straddle that they needed. They don't have the contract accumulation straddled the way they needed it for it to be profitable for them. So now they got to extend the consolidation. With an extended consolidation usually comes one more swipe at the stops. It could be mild, which would be the third hit down. Right? You get that a lot. You get 3 hits to the low. If it hits the third time down, you're good. The trade's even more solid. It's going to reverse. Here's why. They didn't go down there because they were bored. They went down there for the cash. They grabbed it, got what they needed, and they get out of the zone. After the third hit, you can expect a major move. Okay, write that down. It's not on the slide. If they hit it 3 times, expect a major move. The better trade is if they hit it 3 times and each subsequent swipe is not taken out. Okay, does that make sense? Here's why. Let me just draw on here. They spike it, pull back. They hit it, come near it, miss it. They go on, hit it again, miss it. If this is rising, damn, I lost the slide. If this is rising, okay, that means that lower level shorts are grabbed. Don't let them out. Lower level shorts are grabbed. Don't let them out. Lower level shorts are grabbed. Got everything we need. Lights out. That's what it means. Okay? Now, back to the trading zone. Sorry the slide got wiped out, but I'm going to wipe this out now. Okay. Right, blah, 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 all this stuff. Okay, last quarter to 1/3 of the box. 1, 2, 3 to the low. 1, 2, 3 swipes at the low. It could be in 3 candles. It could be in 1 candle. It could be a railroad track. But when you watch that candle form, it's in 3 pulses. And I'm going to break it down for you how it pulses. Okay? So now, they pull back, they go into accumulation. Got to get my money, that's why I'm here today. They hang around. They push down and do not take out the previous level. That forms the W formation. Your entry is on a close. Confirmed. I'll talk about the variations on the theme in the candle. Your entry is here. The first target is the high of the day. Okay. Think about this for a minute. If the Asian channel is 45 pips, that's 50 pips right there, right? 45. If the stop hunt is 25 to 50 pips, let's just call it 75 pips. I want you to learn how to become a master at grabbing 50 pips in your sleep. Okay? And it can happen. And then the goal is to maximize your time in front of the screen to where you add contracts and you come out with the number of dollars you're looking for. Okay? So now, the trading zone, they come out in 3 swipes. They always pull off. They make some outside structure. Some structure that's lower than the current consolidation. Thank you, Paul. I've been working on my artwork. Okay? They will consolidate off of the low, away from the pin, away from it, because they have some number of people trapped down here. They do not want to release them. It's not their job to release money. Their job is to trap the money and punish the traders. Okay? So that's how this comes in. That's why it's an outside bar, an outside structure. Spike to the high, spike to the low, same thing. All right? Let's look at it again from this angle. All right? Accumulate all night, collect, collect, collect. All right, widen the swing. Got you. 1, 2, 3 to the high. 1, 2, 3 to the high. Pull back quickly. Get off of that high. Trap the traders. Accumulate more contracts. Validate the fibs. Validate all the extension patterns. Anybody that got it right going short, we got to take you out and scratch you out of that. Sorry about your luck. 25 to 50 pips out of the last quarter, 1/3 of the blue box. Okay? That's how the trading zone is set. The entire business is how they handle the initial high and low, and the high and low of the day is the entire business. That's it. That's the whole business in a nutshell. Thanks, Dave. The fast move in Forex is fake because they're saving their money. They're doing it on light volume. They're flashing the pairs. So when it spikes out really quick, what you thought once before was momentum is actually the first leg of the stop hunt. The aggressive moves in this zone is to keep you confused about what direction, and the ones that got it right to stop them and shake them out and take their money. That's the nature of the beast. That's what they do. Okay? Your job is to take trades near the low of the day and the high of the day. That's it. That's your job. So with that job in mind, okay, here's a box that's blown out. Okay, coming out of the London session, there's the spike to the low. Bam. They come back 2 bars for railroad tracks. Either one of these entries is acceptable. They come back again and form up the second leg of the W. This is level 1 consolidation. See the pins? Hit the stops, hit the stops, hit the stops, hit the stops, rise. Hit the stops, rise again, change the pin to the top side and snag everybody. By the way, this is what I mean. This would have been the initial high of the day candle, or the secondary high rather when it's cut. This would have been the high of the day, right? The second bar comes in and takes out the high, but closes all the way down here, right? That's where it closed. That's railroad tracks to the high, where the second leg takes out the first. But if you know anything about candles, which I'm going to cover, when they spike to the high like that, they quickly snatch the market away from the higher level longs and send them into a tizzy or a panic. I don't know where I got this tizzy word from. My wife said it to me the other day, and it's stuck in my head now. I hate it. Sorry about that. They send you into a panic, right? You notice 2 bars is straight drop. Actually, 4 bars, 1 hour of straight drop. That 1 hour of straight drop, if you were long, sucks for you. You're freaking out right now. You're moving your stop. You're telling your wife to put on CNBC. You're trying to figure it out, right? Think about what they do. If you are long, they end the day back in consolidation, and you almost get out on either one of these 2 passes, but not quite turn a profit, and you tell yourself, I hate to lose money on this. I'll hold it overnight, see what happens tomorrow. Right? That's the old way you trade. That's over with now. The new way is to understand that the high of the day, you take a short in here, and in 3 bars you're out of the watermark on a spike to the 50 EMA. And if you didn't book your profit on the first pass, you got one more chance. Most of the time, market makers will repeat the level on a near miss. Our group knows to take that or to book a profit if you're in the other way. Okay? That's what I want you to start to understand. All right, here it is again. Here's your vector to the high, right? Pulsation to the high. It happened to be 2 railroad tracks to the mayonnaise. What's kind of cool about that is that the traders that take the moving average cross or break plus a close are now long. But we know it's the high of the day, and we know that they snagged a bunch of traders on this railroad track right here. Right? Then what do? They pull off, and they go into consolidation for about an hour. That consolidation keeps the retail traders hopeful. Right? Think about it for a minute. You've been in a trade. You're down 15, 20 pips, 25 pips. You go, oh, it's holding that level there, man. That's support from February 07. It ought to hold and bounce and continue on back up past the 200. Think of the mentality. That's also a rally-based drop, rally-based rise, whatever the hell that thing is. Rallies up, bases out, and rises up again. Some stupid textbook term. I can't remember. It's not important. What's going on here is people are calculating this in their little heads, and they're already planning on where they're going to take their wife. Right? They're projecting this move, and we know that it's BS. We know that it's not going to play out like that, and that they will correct off of the high of the day once it's established. And you know the trade is good because they pulled off and went into extended consolidation to hold the level. How long do they work these levels? 30 to 90 minutes. The 30-minute anomaly is this, railroad tracks. The 30-minute anomaly is 15 up to the high, 15 away. They spike it in 15 minutes, and they immediately get out of there in 15 minutes. That's where the 30 minutes comes in. But an ideal high setup is 90 minutes to about 2 hours. I could tell you that in the pound crosses, railroad tracks occur most often. The volume, for some reason, they must trap quickly in the pound crosses and get out of there. Okay? So here's what happens. You have your drop. This is the no trade zone, especially for the newbies. Okay? You should be in your trade and up, and you should be in profit like right here in 10 minutes. It's over. I'm exaggerating. An hour or so, you're out. No nursing. The trade goes into profit immediately. When you catch the trade at this hammer, let me toggle. When you catch the trade at this hammer or this railroad track, they shift the zone right here and go into consolidation and then shift it again. You're up in profit the whole time they're consolidating. Depending on the spread, +5, -1, +7, you're in consolidation. Somewhere in here, you're out. You got your +50 for the day. If you want to hold it, that's okay. The exit is the reverse signal after 3 levels of drop. You're not always going to get 3 levels intraday. Understand that. But now, look. Take these 2 pieces. That structure right there, right? That's as an outside bar, those 2 pieces together. If I put it on a 30-minute chart, those 2 would be together. That's an outside bar spiked to the low. Notice something else, too. When they hit the low again, you have your 3 hits to the low. This happens to come in at 9:45, and you have your consolidation to start the session above the low of the day that's established, right? It's safe to enter anywhere in here. The better entry is when they make the pass towards the second leg and fail to take it out. I'll cover the times on the boxes. Just enjoy the concepts right now. Don't worry, Robert. I got you, man. The trade is counter to the market maker trend. So the first target is the the watermark, 50 EMA. Look to take between 30 and 50 pips on a counter to the market maker trend trade. Can it go for more? Of course. But you are counter his setup. If you're in A1 or V1, which I will cover, I'd rather you not counter for the day. Okay? Understanding the cycle, A1, V1 is a do not counter. Because the straightaway trade occurs most often here. All right? Hope you guys are seeing this. Okay. Trading zone again. This is exactly an example of 3 hits to the high where you would have scratched out, and that's okay. But when they hit it again and didn't break it, you got something solid. Okay? The only thing I don't like about it is 2 hits are in one session, and the third hit is coming into the U.S. session. I like to see the hits spread out over 2 sessions. That is way more powerful because that means they accumulated for a while. But look at all this accumulation, right? Look what you got. Here's the high. You got your pushes up. 3 swipes at the high. This is variation on the theme. Okay, now, they hit it. They trade off of the high for hours. They come near it, but don't take it out. Notice how the pins have flipped to the top side. There's no bottom side pins. That is such a huge clue, I can't tell you. Notice on this slide all the top side pins. It's very important. Why? They run the market up, snatch it away, grab some traders. Run the market up, snatch it away, grab some traders. Run the market up, snatch it away, grab some traders. But I want you to see what's happening down. Look low to the TDI. The price is staying at the same level. I'm going to talk about the TDI, don't worry. The TDI is built on the RSI. The RSI averages the closes. So what's going on here is that taking an average of the closes is plotting a falling RSI/TDI line. That is telling you that these guys are averaging lower closes. What does that mean? If they're averaging lower closes, it means they don't want to go back up to the same level, and they're closing and jamming people every time. That's what it means. Okay? That's how you read the indicator the right way. That's how you explain divergence properly. The average of the closes is off of the high of the day in this example, and it is jamming traders on each and every pass. Hang on, Terry, I'll explain it. Okay? Yes, if you go long here, you're toast. But think for a minute. Look at the technicals, how they're set up. We got a watermark trading above mayonnaise, so that means the 50 is above the 200 EMA. That's a technical long in every book. You buy the dips or the consolidation zones in a downtrend, anticipating the AB equals CD, the 1618 extension, the lightning bolt's going to strike you in the head or equals whatever, right? Those are the technicals that we've all been taught in the books. Understand? Them holding the level ensures that the retail traders pile on the wrong way, not understanding in session changeovers and the market makers' targets when they come on. Holding that level guarantees that retailers are taking it the wrong way. Now, here's a little tricky one for you. Holding that level also allows them to work the Euro odd cross, AJ cross, or anything paired with Australian. Now think for a minute. They come out of the box, they issue 3 swipes and hold the high. They hold the high for 2, 3 hours, 4 hours, almost half a session, 4 hours. Holding the high does 2 things. Tricks the hell out of the retailers, induces longs, and allows them to correct an Australian cross on the backside when nobody's looking. This setup signals to you that there is opportunity in the Australian crosses. Understand? If they extend the high and hold the level, the opportunity presents in Euro odd, AJ, no, not Applejacks, Australian JPY. Anything crossed with AUD. Look on the big board. There's tons. Think about how powerful that is. You can come back on the third hit when they come back and change the session over, and you could still take this after you've had all night. Okay? Chasing this currency after it's left the station is an absolute no-no, or whatever you want to call it. I got to hit you on the hand or do my fingers, like shame on you. Chasing this after it's left is an absolute no trade. That's why this says no trade zone. When they shift the zone away from the higher level long holders, it's too late, man. There's ways to get in that, but it's for the advanced traders. I don't want you to do that right now. I want you to simply take a short off the high and a long off the low and be able to add contracts. Your entry is comfortable anywhere in here. The second pass goes, doesn't take out the high, you can enter in here 30 to 90 minutes while it holds. If they make another pass and don't take it out, restart the clock, the trade's still valid. And then look what happens. US changeover, they don't take out the high, lights out. Straight red bars, an hour and 30 minutes to profit. First consolidation zone. Right? Then another drop. Simple. Do not try to, a lot of you guys are trying to turn this into a W. You have to understand they worked the high today. If they work the high first, you're looking for short opportunities. If they work the low first, understanding where the peak is, which I'll talk about, you have to understand they work the low first, you're a buyer against the trend. If they work the high first, you're a seller against the retail trader's trend. You got to think like these guys, not like a textbook retailer. Okay? Hope you guys are understanding. All right. We're going to cover some rules to profit by, and then we'll take a 5 or 7 minute break, okay? Here we go. Write these down. I'm going to go slow. Stop trading every day. Trading every day lines the broker's pocket, doesn't line your pocket. Now, I'm not saying take off and show up once a week. That's not what I'm saying here. What I'm telling you is you need to show up in your office every day at a set time. Look for the setups. I'm going to give you the window of opportunity when those 2 times come. If there's no setup, there's no trade. Don't sit there staring at the chart going, oh, man, maybe that's a second leg of an M or a W. I don't know. Might take it. You're over. It's done. That's it. I want you to find the crystal clear setups that form the big W's and the M's or multi-sessions, the easy-to-read stop hunts where you will be successful. What's the difference if you take 10 trades with 1 lot or find the absolute pristine setup you know is going to pay out and take it with 10 lots? Hit your 50, pick up $5,000 for the week and be done. And have no stress, no worry, no aggravation. That's how you got to start thinking. You got to start thinking like a market maker, not like a retail trader. That activity or the 9 to 5 mentality where you got to come in your office and trade every day because you showed up. That is crap mentality and leads to failure. Learn to become highly selective of the setups that I'm showing you. If it scares you, if the variation on the theme messes with you, that's a pass. I promise you there'll be another one tomorrow in more pristine condition than maybe the one you passed on. I promise. Okay, I want you to set your trading hours like this. Times are Eastern. I want you to show up in your office around 12, 1 o'clock in the morning Eastern time. I want you to look for the setups at the end of the blue box, which is the last 1/3 to 1/4 of the Asian session, and go to about mid-London, around 4 hours. Take a break. Zen and his wife Diane have a lot of children. I lose track sometimes. They cannot stay up at night. They trade the red box in the morning after they leave their kids off for school. After you trade the agent session, if you want to come back, and most of you do, you can't stand it, take a break, take a nap, clear your head, walk the dog, smoke a pack of Subio. Then trade the red box for about 2 to 4 hours, from 8 to 11, 8 to 10. And that's it. Don't stand like a zombie and stare at the screen. It's not necessary. That's the behavior that leads to destruction of your account. Okay? And I'm going to, after the break, I'm going to explain to you why these rules apply. Yeah, Subi, eat some black chocolate, man. That's good stuff, especially from where you are in France. It's really good. Okay, so listen. Here's how you do. Show up in your office. You're going to immediately be able to do a check down on the chart. I'll show you how to do it. You look back 3 to 5 days, identify the peak formation, and see where you are in the cycle. WVVM, MAAW. I'll draw it for you. Don't worry. I'm just telling you about it. Okay? You know where you are in the cycle, what day of the cycle you're at. You have the technicals worked out. You don't have to draw lines and fibs and crap on the chart. Okay? Depending on your dealer, the blue box ends between 1 and 3 a.m. Daylight savings time, it moves back. I don't change mine. I leave it at 2 o'clock. I don't change it. When the clock goes back, I don't care. Just leave it. It's too much work. Become highly selective. Take a break in the middle. Come back for the end of the London session, the beginning of the U.S. session, and make sure you encompass the 9:30 equities market, U.S. equities market open, in order to be there for the breaks. Right? You got to encompass that couple of hours because they might come in and hammer a brinks for you, and you got to take that trade. If you're done in the London session and get your 50 pips, Marta, if you're listening, don't give it back in the U.S. session. Okay? I think tomorrow, or tomorrow's Thursday already, I think tomorrow Zen is going to cover what him and his wife do for the U.S. session. Okay? All right, it's 7 o'clock. Let me pull up my little stopwatch. I didn't do it yet. Hold on. Okay, I tried to answer some of your questions on the break that were pertinent to where we were. Coke, very nice statement. Thank you. He had an aha moment last night. That's the whole point, man. Okay, here we go. I want you to learn to capture 50 pips, and right now, not 1 pip more. You're going to be able to add contracts, man. Greed kills all good traders. Here's what I want you to think about for a minute. If you accidentally get jammed up in the stop hunt, you should still be able to book a profit going the wrong way if you aim for 50. Okay? So if you learn to not be too selfish or crazy or greedy or whatever the right word is, and learn to extract 50 pips consistently out of the market, even if you trade the wrong directional bias, you got a shot at hitting your limit. I can tell you that Zen is an excellent trader. But like all men, we got to get more, right? It's the testosterone. We got to beat these guys and beat the hell out of them, get more and more and more. And he struggled with this when I first taught him about 1.5 years ago. He insisted on trying to lift his take profit and go for more, and I told him why. A lot of times when he lifted it, he would end up with plus 30 or 35 because they would make the retracement on him, and he would be damn it and take his 35 pips off. When he locked in his mind, the take profit needs to be a fixed target, and he'll be in and out in 3 to 5 bars. When they shift the zone and start pulling away, he'll hit his limit and just start using contracts to compensate for the extra pips. His trading turned around completely, and he's now, I can't say he's the master because I think I am, so he has to be the junior master. Anyway, greed kills all good traders, and everybody goes through that phase of where they feel like they can get more and more and more. Don't forget why you got in this business. Time, freedom, and leverage. Use that to your advantage to extract your 50 pips like a master without fail and add 5 lots or 10 lots or 80 lots when you become proficient. If you know that you're going to hit 8 out of 10, the losers aren't going to bother you because you know you'll get it right back and end the week net profit, net positive. I want you to learn to take only crystal clear setups. Whatever that means to you. I went through this with Lauren last year. I wanted her to pick her signature. And I don't know if she ever did. I can't remember. She sent me an email a while back. She liked 2 pins to the mayonnaise. That was her deal. If you get a stop hunt at 3:30 in the morning and they hit right to the mayonnaise and they issue a pin or a hammer right on the mayonnaise, that's a nice setup. That's going to pay out. That's going to bounce off of the 200 EMA. I'll explain to you why in a little bit. But what you need to do is find what it is that makes you feel all gooey inside. Like, wow, I see that 2 pins in the mayonnaise. I see a W on the 4-hour. I see 3 swipes at the low. When you establish that and become comfortable with it, I want you to focus your homework on that. If you say, Steve, you know what? I'm going to take 3 vector candles to the low, second leg, and I'm going to grab my 50 and be out. Then you need to focus your homework on finding those trades and see how often they pan out. If you decide you're going to focus on multi-session big W spread out over a day or two and then convert the spot trade to a swing and hold it for 2.5 to 3 day cycle, 200 EMA, my friend. Mayonnaise is 200 EMA. I'll cover it, don't worry. If you catch the midweek reversal or the big W formation over 2 sessions, that's the kind of trade you can hold. If you want a swing trade, obviously you got to hold for more than 50 pips. But when you're learning, if you can't make 50 pips, how are you going to make 250 pips? It comes with time. It's a process. The biggest problem most of you are going to have is flushing the crap out of your head. I don't know how to do that. The old technicals. Coke wrote me a little something on the break that he was hanging out with some of his friends, and they took the wrong directional move based on old technicals, and he said he felt bad because they were going the wrong way, and he knew it. He saw the market through a market maker's eyes or through our eyes as a group and realized those guys are going the wrong way, man. Sorry about their luck. Anyway, that's the stuff I want you to understand, is that if you see the perfect setup, you can take 50 contracts without fear of loss. If you're trading a 6 out of 10 system and you're not that good at a 6 out of 10 system, how in the heck are you ever going to put those kind of numbers on comfortably without fear? Okay? But I want you to understand that if you say I'm going to take multi-session M's and W's, you go back and look how many times those things pay out 50 pips. Almost always. And you're going to see that the ones that don't hold consolidation and scratch out. When you realize that, which comes from time, screen time, and doing the homework and seeing them, when you realize that, you're going to not be afraid to put 10 standards on there. I'm not telling you to take 10 standards tomorrow. I'm telling you to start small, grow your account, and get yourself into a position where you can take comfortably 2 to 5 trades a week, 1 a day, of the most pristine, perfect setups that will yield you what you need to make to pay your bills and be comfortable. Everybody's different. If you live in New York, you've got to have like 500 trades a week. If you live in Nebraska, you probably got to have 2 trades a week. Depends on your lifestyle. But it's all obtainable here by understanding how these guys behave and controlling your emotions and your greed in the process, okay? All right, why 50 pips, Steve? I want to go for 500 pips. Okay. You are not going to deal from the absolute bottom or the absolute top. So let's take 10 to 15 pips off of that number of the move, right? You got to include the spread and slippage that these guys do. That's the business. The bigger your contract size is, the more you'll start to see it. Let's add 5 for slippage and the spread. You got a 2-pip spread, they slip you a pip 3. It's a lot of money with a lot of standard lots on. We all know that all 3 levels are not going to appear every day on the chart. So that limits you to what's going to be available to take. So if you average level 1 and level 2 from the peak formation to the high-low day consolidation zone, you got about 70 pips available to you if you have a tight ADR for the day. You can easily grab your 50 pips out of that float and grab most of what was available for all the other traders and come out way ahead of the curve. The bottom line is this. I don't know if DJ's in here, but he wasn't seeing the pattern so clearly. But because the stop losses are so tight when you get in near the low or near the high, 7, 10, 15 pip stop losses. I don't say that in public because people think I'm nuts. Hey, Doug, nice to see you, buddy. I hope I'm not embarrassing you saying this, but he had a bad week where he had more losers than winners. But because the stops were so tight and he was taking 50 out of the market at will, he was net profitable. I want his numbers to be better, but the bottom line, while he's training and learning, he's still making money. Because he's getting in close to the numbers. Sometimes he's wrong and he hits a stop, but it's 10, 15 pips and he goes again. He can have 2 or 3 stops, and when he hits one, he gets it all back for 50 pips. It's called controlling your losses and your emotions. Hey, Zaim, if you understand what's going on and how they structure the stop-loss levels and how they hit it, you can come right back at them. I once heard in a school somewhere, I don't want to say the name, they said if you get stopped out, to go on vacation. And they really meant it. You do not want to be on vacation with me if I just got stopped out. What fun is that going to be? What I want you to understand is that when you analyze the market conditions and you get stopped out, if you walk away and come back the same time tomorrow, you could fall right into the same conditions. If you get stopped out, anyone want to take a stab at how long you wait? 2 hours. Why? If they go vector 3 again, 3 bars takes 45 minutes. If they spike the low and go back into consolidation, that will take another hour or so to set up that structure. If they spike the low again, that's another 15 to 30 minutes. There's your 2-hour time window for re-entry. The structure must be 25 to 50 pips above or below your previous entry. If they hold the level and pass a third time, and it still is also 2 hours, and they might have snapped you out with a pin and closed below or above that structure, that is still a good entry. I'll draw it for you, don't worry. I just want you to listen. Okay? So if you take a trade right out of the London box and they vector down, it looks like the W to you, and they hit your stop, you don't walk away. That's what amateurs do. You analyze the market condition, wait for the next level stop hunt and strike zone, and you strike. These guys vary the levels to keep you confused. There might be a 4-hour line laying down there. They might come out, hold the level, and then go, there's the 4-hour, bam, and go get it. That might cause you to get stopped out. Control your stop and enter on the next strike zone 25 to 50 pips below where you just were. And I'll illustrate this. I just want you to hear it. I'm trying to give you the concepts for the next couple of days. You have to listen. Don't worry about the charts. Don't worry about your indicators. Don't worry about stuff you cannot see. It's irrelevant right now. I'm trying to get you inside the head of these guys, the mind of a market maker, and understand how he handles the market. This knowledge by itself is invaluable. Don't worry about the chart stuff. We'll straighten it out, I promise. Okay? If you listen to the rules I just laid out for you and wrote them down, there's a good chance you will hit your limit every single day. Or every time you take a trade, if you wait and exercise patience. The thing that's kind of crazy is you can trade both ways against the trend and against the retail trend. So that means you have an opportunity to book profit in both sessions from both ends of the range. You can take a short off the M and a long off the W on the extremes of the range and be profitable both trades. And book yourself 75 to 100 pips consistently. 50 on the first trend move, 25 to 50 on the counter. Going against the retail traders. Market makers trade both ways every day. Why would you have fear to follow them and trade both ways? You can average 100 pips a day doing it this way. Combination of pairs, let's say you take Euro, GBP, CHF, you bag 50 in the London session on all three pairs. That's $1.50 times your contracts. Then you can take the counter in one or two pairs back to the watermark on the ideal level 3 drop setup W back to the watermark. Another 40 to 50 pips. Or until the pair comes to rest into consolidation. Understand the extremes of the zone. A sucker trades in the middle and offers up your stop loss for these guys. Learn to be selective on the extremes of the range. If you're only studying one pair, that's perfect. Sunny, I don't know if she's here. She told me she got so profitable she ain't wasting her time taking my seminars anymore. I don't know if I should be proud or insulted. She focuses on Euro USD. She took about a $500 account to $8,000+ in a few months. Focusing on only Euro USD and trading both sides of the range, understanding their behaviors, and mastering that pair. Trent, I don't know if he's here, has been chasing the pound USD for years. It was driving him crazy. When I gave him the last piece of the puzzle, he beats the crap out of the pound on a regular basis for multi-5 figures a day or in a couple of days. By the way, you're probably going like 5 figures. What is that? Not 5 figures a year, 5 figures a week or a couple of days. Okay? That's the power of understanding what these guys do. I want you to understand that. Once you master this, you're going to have no more fear. The market's going to be easy. Okay, so now, here's what we're going to do. Let's start to break the system down, the things on the chart that you guys have been bugging me about. And let's start to break them off, put them all back, go over the boxes, the times, the averages, what you're supposed to look for, how price action is supposed to behave, the structure of an MMday. That's what we're going to cover. Okay? So let's do it. The components of a system. I don't care what system you're trading. I hope it's mine, and I hope that you throw everything else out. But you got to have a reason for entering the market. You can't just go, oh, I like Euro today, I'll take it. This has to be called your setup, right? It's got to be based on some fact. Level count, trend direction, peak formation, high, low, where you are in the cycle, V1, V2. You got to know where you are in the cycle and you have to have a setup at the appropriate times for it to be valid. That setup is your reason to buy, sell, or stay out of the market. Simple, right? Easy. Easy stuff. In addition to it setting up, there's got to be a signal presented to you. Second leg pin. Issues on a hammer 9:30. The high or low is formed. The high of the day is formed. Second leg issues a hammer at 3:45 a.m. It's got to be a confluence of triggers. The confluence of triggers has to be all these things that I've been talking about for the first day and a half, has to come together at the right moment in time. Okay? 50 pip, Tokyo channel, Asian range, market maker spread. Call it what you like. They come out of the box. They have 3 vector candles to the high. It happens to be 25 to 50 pips above the top of the box. Market makers quickly pull back, go into consolidation. The second pass comes in, fails to take out the previous high candle, ends on a railroad track, forms out the perfect M. At 3:45 in the morning, that's a setup. The pair's been dropping for 3 days. It's at level 3. It's chopping. It's erratic behavior. I noticed the pins are to the downside. There's a spike to the low outside bar in the Asian session. Market makers come out at London at 3:30, and they spike the low, but barely miss it, the blue tracer by a hair. They turn around and issue railroad tracks a half hour later at 4 o'clock. That's a setup. Okay, those are the things that have to come together. It's the signal and the confluences that all come together at the right time. Okay? That's what I'm talking about, putting it all together. And you will be able to do that. Okay, everybody knows this, but for some reason, this is in every book, and I happen to agree with this one. You got to have a fixed stop loss, man. You can't be like, I put the stop here if I feel like it later. And let me tell you right now, I've heard this before, and if you're doing this, stop immediately. Mental stops do not work. All right, let me say it again. Mental stops do not work. Because you always think it's going to come back, you always think you're right, and you'll go, a little bit more, I'll cut it, a little bit more, I'll cut it. If you're going the wrong way and they're shifting the zone away from higher level longs or lower level shorts, they ain't coming back, and you ain't getting out. The cheapest stop loss available to you is the first one in the right context of the market, and I'll show you where that goes. Right? Mental stops are for mentally retarded people. Don't do it, okay? You got to have a way to protect your profit once it's achieved. I've met people that can pick perfect M's and W's. They get cocky by Friday. They do one stupid trade and give it all back because they can't believe they're wrong. Is that on my tab? I can't help you with that. Those are the kind of behaviors that you got to deal with. You need Norm. Spend some time with him. You need to fix your mental edge of the game. I can't help you with that. That should not be on my tab. You got to deal. I'm going to show you where the stop loss goes in the right context of the market. I'm going to show you how to pick the perfect entries and where to take your profits. If you lift your stop loss, I can't help you. You got to beat this demon yourself. You got to beat it down. There's nothing wrong with being wrong for 15 or 20 pips and bagging 2 or 3 for 50. There's nothing wrong with that. You can be wrong. It's okay. It's better to be wrong quick, get it over with, and look for the next level strike zone. And I think what happens prior to this class, you're so happy that you finally think you got a decent setup that you hate to be wrong because then you got to look for another one, and you're scared to death to find another one. So you're like, oh, man, I thought this was a good setup. Let me just hang on, see if it comes back. I think that's what happens with a lot of people. But once you understand how the structure of the market is set up, you're going to be able to get in and get out both directions, both ways, all the time, anytime. You're not going to be afraid anymore. You should have a calmness come over you. Okay? You got to have a strategy to protect the profit once you got it. Swing traders, you got to move to break even. When you're up 50 to 75 pips, you got to move the stop in behind the next strike zone stop hunt into the next level. We'll talk about it, okay? My favorite is a jumping stop where you manually jump the stop. I do not like a trailing stop. And the answer is simple. Why? Who provides a trailing stop on the platform for you? The dealer. That guy ain't your friend. I've met more good traders that have been trailed out by a trailing stop and they were going the right way because they didn't understand how to jump into the consolidation zones. Now, with that said, if you ain't going to sit up all night, I'd rather you trail the stop than do nothing, because it's a crime to be up 45 pips, miss your take profit by a hair, and come back and wake up to a stop out. That's unacceptable. That's a 40 to 60 pip swing against you, in your favor and back against you, and you ate the stop. That's a crime. I don't care what country you live in, that's a crime. It's high treason to the method. Okay? The goal is to preserve your capital while you're learning and to grow it. That's the business. If you can treat a demo like real money, I applaud you for that. I'd rather use a demo while you're learning, because I want you to preserve your capital. But if you cannot and you have a couple grand, why not open a micro with $500 and practice with real money and leave your other equity set aside? That's a better strategy. And then when you become successful, you have all your equity left. Okay? Important. And if you do like Casey, where you take a small account and triple it, you'll have more equity to put on top of your equity. It's just a better way to go about it. Yes, Nick. That's true. Okay. Trading systems continued. You've got to have a profit target. It's got to be fixed, projected, or based on stops for swing traders, or based on the reverse signal when you become proficient in understanding. If the M is the entry, then of course the W or A top is the exit. Right? I'm sorry, if the M is the entry, the W is the exit. If the W is the entrance, the M is the exit. The opposite signal at the appropriate time is the exit. If you insist on taking the entire run of 255 pips, that's okay. If you grab the low, even if it comes back into mid-range consolidation, you'll close the day around 50 pips. Think, they spike the low, they raise price all the way up. If you don't move your stop, and you were right today, which you should be, right? They're going to come back mid-level. If you never moved your stop, you're still good. You're going to end up with plus 50 or so in here, depending on the ADR of the pair. But why when this was the exit? Okay? It'll come. It takes time. It's a journey. It's a process. But the rules that are used by regular traders, because you do not have unlimited equity, apply to you, but just using them for our methods to trade. Okay? Okay, you got to have money management. When you're learning, I want you to use about 1% risk. One mini lot, one micro lot, depending on your account size. We'll talk about that. There's a sheet provided. You got to have a way to manage your money. And if you don't know how to figure out your stop loss, you take distance to stop times lot size, right? Lot size times pips, or distance to stop equals your risk. Take that as a percentage of your account. Okay, if you have a $5,000 account, a 10% risk would be $500. A 1% risk would be $50. Okay? When you look at some of Rick's statements and trades, I don't know if he's in here or not, he does ramp up his risk. But I can tell you that he ramps up his risk on small accounts after he's already made multi-six figures trading this way. So if he burns $5,000, he don't care, because he'll come right back at it. If it's your last $5,000, I want you to treat it like it's your last $5,000 and trade it with respect, and don't burn your equity down. When you make multi-six figures, you want to throw $5,000 and trade 50 standards and go crazy. That's okay. But let's make some money first before you start doing some of the stuff that Rick does. All right? Rick, I'm not picking on you. I love you, man. I just want to make sure that they don't look at your statements and get jacked up. All right? It's doable. If I can teach one man to do it, I can teach any man to do it. Yes, 1% risk initially. First couple of trades, get comfortable, make sure you're seeing everything right. And if you could do it on demo, even better. But if you don't treat demo right, don't use demo, use micro. Okay? And if you don't know where to deal from, that's what Kim and Compass are here for. Contact them immediately and get you set up at where you need to be. Let them do that for you. That's one of their tasks here with us today. To get you dealing from the right place, a place that has micros, a place where they're not going to trigger your stops every 5 minutes. We want you to be in the right dealers. Okay? All right. Understand, very important, that the market maker pattern that I've drawn for you and laid out for you outweighs any man-made indicator. All right, let me say that one more time. The pattern I've so far illustrated for you outweighs RSI, TDI, moving averages. It outweighs everything. And I always say this, the pattern is the top 3 things you need to be concerned about. You react to the market maker's actions, you will have profit. You will be successful. In order for us to understand how to read charts and identify the market maker's intentions, I took some widely used indicators and applied them to a chart to help us understand the timings, entries, and exits. I took the work time ribbon that somebody made in Russia and I programmed it, or had it programmed. I don't program nothing, just kidding. Had it programmed to match the Tokyo channel and the U.S. session reversal. I took some shadow boxes, thank you, Ray, and put in the key times when market makers issue the Brinks trade. That's what the shadow boxes represent. They represent the times when the Brinks trade will present the stop hunt zones, and I will cover all that stuff, don't worry. Divergence and TDI and RSI, the bands. I'm going to explain how to use all that in conjunction with our methods. But understand, the students that are having more success, as they move forward in their success, they shed the crap off the chart. Okay, I wanted to announce to everybody, Ray mentioned this to me and I forgot, and he just reminded me, that he is currently coding a new version of the work time ribbons that will automatically ping the broker server, grab his GMT time or the broker server time, and match it up to for our needs. It'll be ready soon. I don't know when. If you want to bother someone, bother Ray. I'm going to put his phone number up here in a minute. I'm kidding, man. We're not going to do that. I know, it'll be ready. So any broker that you drop it on, the boxes will shift necessary for our methods, okay? It is going to be good. Since most of you know how to use all these indicators and have fallen victim to popular technicals, using them allows us or you a faster transition. You know what divergence is. If I could show you how to spot divergence during the stop hunt in context of what we're doing, you're going to pick it up faster. If I could show you how to pick a hammer, which is a common candlestick pattern, at 3:45 in the morning, second leg of the W, you're going to pick it up faster. So we've incorporated some of the standard technicals onto the charts to help you see. The goal and the dream for all of us is to shed that stuff and trade maybe the boxes, the ribbons, time ribbons, and a couple of maybe moving averages for where they're going to form the zones. Stop hunt to the mayonnaise, reversal. Okay? That's what I'm talking about. Okay, for the purpose of this class, the EMA 5, 13, 50, 200, 800 will be used. How do you remember? Mustard, ketchup, water, mayonnaise, blueberry pie, whatever you want to call it. All right, here, look. Mustard, ketchup, water, mayonnaise, blue, whatever. Okay? We're going to cover some basic candlestick patterns. Hammers, railroad tracks, spikes to the high, outside bars. It's not stuff that you haven't already seen. I didn't invent them. Candlesticks have been around since the 1600s. I think when they used to trade rice, they used to use them back in the day, commodities. But here's the thing about them. A hammer in the middle of a run is worthless, in my opinion. Steve Nissan will probably yell at me. But here's the deal. A hammer issued at 345 or at 945, a hammer issued as second leg of the M or W formation, understanding the context of the market where you are, will help you to understand our setups faster because you've studied this stuff. Okay? Railroad tracks, double bars, or if you're using a bar chart, railroad tracks look like railroad ties. Is simply market makers run up there, grab the orders, and come right back down, or vice versa, down and come right back up. Understanding that right out of the blue box as three vectors on one side and then the railroad track pulls away, that's going to help you understand the setups. Okay? We're going to use color-coded sessions. The work time ribbon codes the sessions for us to understand where we are in the cycle. I'm going to cover it. You got some crossovers, arrows with alerts. We use 513.50, right? The 513 crossover is the signal line. Here's the thing about the averages. If you wait for the average to cross, you're kind of late to the party, and that's not what I want for you. The 513 cross fires most of the time when they shift the zone away from the level traders. When they shift the zone down from higher level longs, the 513 will cross. When they shift the zone off of lower level short holders, the 513 will cross, the arrow will fire. A lot of times, that shifting of the zone will put you into monster profit immediately. When the arrow fires, it is not an entry signal. It is a confirmed confirmation that you are still in the right direction. Okay? Moving averages in the wrong context of the market are worthless. And I mean absolutely worthless. It's like trading spaghetti, right? Sideways, chopping. The moving averages in the Asian session, they're worthless. The moving average crossover after the stop hunt and the W or M forms, and they shift the zone and the arrow fires, confirmation I got it today. That's what we're going to cover, how to use them in the right context of the market maker patterns. And because we're using stuff that's common technicals, the transition will be quicker. Yesterday's high-low, high of the day, low of the day, HOD, LOD. It paints on the chart as a light blue marker. And I cannot say enough important things about that light blue tracer. If yours is not working, if it's not painting right, if something's wrong, if they're smashed together, those things happen, I'll send you a fresh set of indicators. We'll zip the file up and get it to you. Kanan can do that for you. Pivot points. Pivot points are kind of crazy. They're intraday support and resistance. Here's what happens. A lot of the times, you will get your 3 swipes at the low right to an M1 or M2 pivot. It'll pull back and make the second leg at the same pivot point. That just helps you to trade. Do you need them? No. The pattern, the pattern, the pattern. Some people like them, some people don't. I'm not offended. I didn't invent them, but there's some targets on the chart that help space out where the stop hunts may occur. You have the boxes. If you don't like the pivots, get them off of there. TDI, can't say enough good things about TDI. Dean wrote it, but in the context, the way we use it is a little different than how he uses it. And I'm going to show you. We have trades called shark fins. I think Dean calls them hooks. We have a trade called shark fin long, hold the mayo. It's not a sandwich. Shark fin short, hold the mayo. I'll talk about it. When these signals appear in conjunction with the market maker behaviors, solid gold. Back up the truck. Brinks. The third most important element of the system is the market maker level count. A lot of people struggle with this. And listen, I'm no exception, man. I'm not some Harvard scholar. Sorry, Masood, if you're in here. I'm not making fun of you. It took me a while to figure out what the hell this guy was talking about with the levels. I suspect it will take you some time also. But understand this. You can and will be profitable identifying the market maker patterns and the timings. The levels will come. Okay? They will come to you, I promise. ADR, average daily range. I seen ATR, average true range. We go back 15 periods. Intraday is 15 days. Gotcha, Maseo. We take an average of those 15 days. You know how an average works. The last one drops off, the next one is calculated. It takes an average of its behavior and plots a couple of lines on the charts. A confluence of events. Remember what I said, a confluence of events? Multiple things happening? Think about all these things that are up here. If tomorrow market makers come out of a 50-pip box, right, and they spike the low, they issue a hammer at M1 pivot, you get a shark fin and TDI, it happens to be level 3, just outside the blue box, right to yesterday's blue tracer at the low, this would be a confluence of things coming together. Understand? That's what I'm talking about. And these are the things over the next day and a half we're going to strip down and build back together so you can understand how to find these signals, the proper signals. All right? Just because market makers make a small consolidation zone, do not mistake that for an M forming, Tony T. That is not an M or a W forming. You have to know where you are in the cycle and the proper timings and context. Yes, Peter, exactly. Multiple things came together on Euro CHF last night and issued you a perfect entry signal. Rob, it's up to you. If you see it right, it is. We'll talk about it. It's got to work for your personality. Okay, so what we're going to cover is the trend, evaluation, and count. I'm going to show you the difference between the market maker trend and the retail trader's trend. How to check down what to trade. Box is blown out, you pass. Certain behaviors, this pair's at level 2. Best time to enter the trade. I kind of told you already, but I'll cover it again, a little more spread out. You can't hang around and wait for something every time at 345. You might miss the move. And then the most important thing, how to manage it while it's on. That's what I'm going to cover over the next day and a half or so. Okay? The trend. Is everybody good? Okay, cool. Hey, Sean, I didn't see you there, buddy. Thank you, thank you. Paul, need some ribs from Back 8 Barbecue over there in Texas. Okay, good. All right. The trend. How do we identify the trend? We know there's two types of trends. There's the retail trader trend, what he wants you to see. There's the technical trend, what the rest of the world is looking at. The market makers perpetuate the technical trend and make you see it. They validate those signals on purpose. It's a dirty business, man, but that's what they do. The levels are visible on all time compressions, but I feel that they are visible on the 1 hour chart, highly visible. Some people like the 4 hour. Zaim happens to like the 1 hour. Carr likes the 1 hour. Some people can't decide, so they take the 15-minute and the 1 hour, cut it in half, and use a 30. I don't care. I want you to do what works for you. The point is not to fill my ego. The point is for you to see it. So don't use what I use unless you really and genuinely see it. I'm not going to be offended, man. I want you to get it. Okay, keep this in mind. Hey, John, how you doing? The trend is set by the market maker and can be reversed at any time for no reason. The real reason for him to change the trend is because the dollars are getting out of whack and he needs to get them back. Understanding this, that it goes both ways, gives you a major edge. It allows you to stop thinking about the technicals and that, oh, in a downtrend, I'll only take rises and sell. It allows you to say, anytime it bottoms out, I'm not going to wait and buy. It allows you to take it down to the buy level and then back the other way. Don't get so caught up in your baggage or bias that you miss the good setups because you think it's supposed to go this way. Market maker hits the stops high, you're a seller. Market maker hits the stops low, you're a buyer. In line with peak formation, second day V, good stuff. Got it. Okay? If I'm going too fast, please let me know. This is important. This is how to establish the trend. Now, I like to think everything I say is important, but this is pretty important. Okay. The trend is generally set up as a 3-day cycle. Day 1, there could be multiple rises inside of day 1, but day 1 should be level 1 rise back into consolidation after the anchor point is formed. Okay? It's reversal day. Peak formation is formed high or low. Second leg W, second leg M is formed. What's kind of cool about knowing what you know now is that day 1 comes as a market surprise. What do you mean? It catches all retail traders off guard, and then it's aggressive. Look what happened Sunday, Monday. 3 hits to the top, the trend was up. Just kidding, dropped the bottom out of it. This catches everyone following traditional indicators and trend following strategies off guard, retail traders. The news is used to perpetuate false trends. Okay, my D fell off. Thank you, Gloria, for my English lesson. If you see the anchor point W, right? And then it rises up and pulls back, and the next night there's news. They'll make a V bottom right around 3:30, and if the news comes out at 4:15, whatever it is, they will spike in the correct direction to continue on with the market maker trend. So that's why I told you in the presentation the news is crap. If they happen to have trapped lower level shorts when the news is released, they will rise price. It doesn't matter what the news says. The news might say, oh, the pound's weak, and then the pound will still rise. That is simply because they have to complete their targets in their cycle irregardless of the news or regardless of the news. Okay? Yes, the news is BS, man. I said it and it's true. The news is pure crap. No, I'm not saying not to pay attention to the news. You need to be out or flat on the red releases. I'll talk about that, but for argument's sake right now, don't say, oh, the news said that there's less jobs in the U.S., so dollar-based pairs will drop. That's not true. What's going to happen is, depending on where market makers are in the cycle, they will behave based on that and nothing else. Okay? If they're at peak formation high, they'll hit the stops high one more time when the news is released and then drop. That's how they do it, and that's why they do it. No other reason except for the money. That's why the news doesn't match up with the way the currencies move. That's exactly why, because it doesn't matter. Okay, day 2. Okay, so you have day 1, peak formation is formed, comes as a market surprise, reverses, right? Day 2, the moving averages on the higher time frames will signal. The 5200 on the 1-hour chart might cross over. Traditional indicators will cross over and fire a signal. Zero line MACD will cross. CCI might cross. RSI might cross the midline. Retail traders wait for confirmation and validation to enter the market, right? I can't think of who it was, but someone had a system where MACD crosses the zero line on the pullback. It has to take out the next bar. And when it takes out the next bar, you enter the trade or some crap like that. That's called a validation of a signal. Retail traders wait for this. Waiting for this forces them to lose money. But here's what happens. If the traders aren't committing their funds, market makers aren't making any money. We all know they're in the business to make money. So by executing a move in such a way on day 2 that forces the moving average crossover, the indicators to cross the 0 line, or certain indicators across the 50 line, it fires a signal. And to come back with a false move again towards the high or towards the low validates those signals. Understand? It's on purpose. That's why when you get a signal and it validates and you take it, it doesn't always work out. You were in the wrong segment of the market when the signal got validated. You were in stop hunt high, and you took it as an extension continuation because you had MACD confirmation. It broke the previous swing high. That's why that shit doesn't work. That's where the pin comes in on the second leg and snatches you away and grabs your orders. Exactly. Market makers force the hands of the retail traders to get them to commit their money because, after all, objective number 1 is to get you to click the mouse. If that money sits there on deposit and doesn't get into open float, it's of no use to them. Ah, sneaky. I brought that all the way back from day 1, slide 1. Understand? They know what they're doing, man. It's a big carnival. They validate the technicals on the chart. They show everybody the crossovers. They show everybody the 0 line crosses. They validate the swing high with a spike, picks up the orders, right? Gets the breakout traders to fall, snags them. Bingo, got them. Okay. Day 3. Remember? 3 psychology. Traders are now convinced that this is the real move. Market makers show a thing called trend acceleration. That's when you get separation from the moving averages. The averages are fanned out. You get vector candles at level 3. The vector candles seem to be a monster amount of momentum entering into the market. Some people might even say, one of my pet peeves, risk appetite's in there. Hate that. Okay? You start getting vector candles on the last day of the cycle, and you also will see a 33 trade. Yes, Ziva, it does work. It does work or trades won't be around, but those are 50, 60% systems. I mentioned earlier, the news is used to further the cause. Just when everybody sees it going a certain way and they get excited and want to take the trade, market makers hit the brakes and trap everyone except us the wrong way. Okay? All right, so now we have a 3-day cycle. Day 1, peak formation high, is usually the end of a trend cycle. Catches everybody off guard. Market makers trap the higher level longs, lower level shorts, and snatch the market away from them. They come back, form out the M or W, which is our anchor point to go the opposite way. That move validates all the retail stuff that's out there. The news could help to trigger that. Could time it right at 4 o'clock or right at 8:30 U.S. time to get the news release to coincide with it. Day 2, the new trend is underway. Market makers must force the hand of the retail traders to commit the funds the opposite way they were previously going. How do they do this? They perpetuate moving average crossovers, 0 line crosses, RSI 50 line crosses, CCI line crosses, whatever the indicator people are using. They force those to cross on the higher time frames. Most people trade multiple time frames. So the extended trend run forces all those charts to turn over. The 3rd day of the cycle, vector candles, acceleration towards the high. This also applies intraday, by the way. The vector candles, acceleration, pins turn to the top or bottom side. Pins turn to the opposite direction of where they're going to be going, or the current direction. If you start seeing pins issued to the top, pretty sure you're in level 3. Okay? If you see pins issued, pull back. Again, pins issued, pull back. You're in level 3 of the cycle. Understand that. Market makers apply the brakes, trap everyone except us the wrong way. That's the 3-day cycle. Now this cycle in 3 moves also plays out intraday. Remember I showed you? Peak formation low, stop hunt, rise off of the low, hit the stops, rise. Hit the stops, rise. Hit the stops high. One direction, unidirectional stop hunt. Snatch the traders, pull away, validate the pendings, one more pass, pick up the breakouts, grab the guys that were in the right direction by stopping them out or scratching them out at +1, and then on their merry way the opposite direction. Okay, I'm going to draw this stuff for you. Okay. The reversal in the market is used for market makers to book a profit. Okay, price is rising, couple of days, everyone's long. They're buying from the traders, so they are net short. They got to get out of those positions or offload them to book a profit. The spike that you see before the reversal hits the stops of the people that are right, puts those contracts in their pocket, and induces people to take more longs. Those contracts will end up in their pocket as well. Think for a minute, man. Do you really think the broker's matching you up with some dude in China? And if you're in China, do you think he's matching you up with some dude in Italy? Do you really think that? Or is he, in fact, taking the other side of your trade and hoping that you haven't had this class? That seems more plausible to me. Okay, I'm going to break here. Is anybody writing the slide down? Please, I'll leave that slide up. I'll put the clock up. I'm actually starving today for some reason. I don't know what the hell happened because I ate. But it's 8 o'clock. Let's take our 30-minute break. I want you to think about what we've talked about so far, the trend cycle, stop hunts, all the things, and I'm going to start breaking things down for you. Okay? All right, I'll pull up my little, let's do 30 minutes. I don't think that's too long. I think it's good. We're going to go to about 11 o'clock tonight. Around 10:15, depending on where I'm done, Carr, one of our top students and traders, is going to hop in here and show you how you're supposed to be marking the charts and actually teach you how to do it. I got a lot of emails last night from people saying, man, I've never even tried to mark a chart before. I don't know what to do. So I guess it would make sense that before I give you the homework that he would show you, in fact, how to do it. The veterans that have been around, you can knock off tonight around 10:15. Okay, the new guys, I want you to submit your homework in this format and start to see what you're looking at on the charts properly so we all can be doing it the same way. So when you post in the forum, your charts will match other traders' charts that we're all working on together, okay? All right, let me get my little clock, take a break. Couple questions. Let's see. Dave asked me, is it okay to trade in the changeover shadow box? Absolutely, Dave. The changeover shadow box is where you expect the stop hunt to come in. Is it always going to line up right there? Absolutely not. But if the pattern, you trade the pattern. The boxes are a guide. If the boxes don't line up, don't not take the pattern because you think it's supposed to be in the box. Understand? Let me run this by you real quick. I usually say this every class, and I failed to say it this time, so let me say it now. For the first couple of 3 days, you're going to be confused. You're going to be asking me about the indicators. You're going to be asking me about the boxes, this stuff. I promise you that by the end of the 3rd day, okay, so tomorrow night, 3rd day of my teaching, not 3rd day to class. By tomorrow night, things should start to come together. Okay, if they do not, then you need to send me an email and tell me what's wrong. Okay? Anybody having technical problems? I think Zen has a way for you to call in. He can help you load Java. I don't want you to miss out. The recordings are going to be hung in the forum for 2 weeks. So if you miss a night or you have issues, just get in there and write down the time you went down and then convert the recording over to the time you need to pick up, right? Like it's 8:30 now. If you went down from 8 to 8:30 during the lunch break, then you're good. If you went down from 7:30 to 8, that's the section you need to watch, okay? Just make a little note next to your computer and say, man, I didn't hear that part, I need to hear it again. That's the point of the recordings. You could start and stop them. Okay, nice to see you, Alan. Back in here, thanks for the no problems. Okay, so we left off on the chart about hoping he didn't take your class, okay? So seriously, if you're confused, just relax and listen and try to observe and pay attention. I promise you, I'm going to start hammering all these concepts together. What I'm doing is I'm throwing a bunch of concepts at you, and then I'm going to wrap them all up and bring them back together by the end of the sessions, okay? The idea is for you to realize that there's something else going on. These guys suck, and they're trying to take your money. And understand that you can beat them when you trade in line with them. That's what you need to understand right now. I'm going to repeat the concept enough times that it should stick in with you. It should stick to your brain. If it doesn't, that's the point of the recordings, okay? I don't want to waste too much time on that. Continuation of the trend slides we were looking at. Not continuation of the trend, continuation of the trend slides. A trend reset will be used for market makers to book a profit but not reverse directions. Right? What happens? Give out their money, give out their money, give out their money, need some back. All right, but you know what? The target is that euro still must rise to a certain point. So they reset the trend by forming another anchor point, V or W, and then they break the previous high and continue on up for another 3 days or so. A reset will represent a new peak formation, high or low. Then you can expect 3 more days of rise or fall. However, very important, if no trader falls for it, the market maker may reverse the direction after only 1 more level or 2 more levels. That's why you have to understand his behavior in order to understand where you are in the cycle. Right? Things that I started talking about. Am I near the high of the cycle or the day, Steve? I don't know. Is he opening the spread? Are the pins switched to the top side of the candles? Have you seen vector and acceleration and speed around the price points you're at right now? Did it take 3 aggressive candles or 1 long spike candle to get there? These are the things you have to ask yourself. Is this the end of the ride? Is it 3:30 or 9:30? Is it 12 o'clock in the afternoon when they go into consolidation? That's how you tell where you are in the cycle, by the timings and the behaviors, not by the technicals that regular traders look at. Market makers validate that stuff to trick you. Like I tell people, oh, they go out for about 3 days or so and they got to get some of their money back. They go, Steve, euro's been going up since its inception when it was 99 cents to the dollar. I remember that. I remember people saying that the euro will never pass the dollar, that it's a natural stop-loss barrier. And guess what? Those idiots didn't use a stop, and when it broke the dollar and never looked back, they're probably still holding open float from '01 or something. Understand, you have to start thinking from the back side of your screen. Start thinking like one of these guys. Start thinking, okay, what are the retail traders looking at? I see that consolidation accumulation phase right there. I know if I was on the other side of that, I'd be collecting up some contracts right now. What's my next move? I'm going to hit the stops 1 more time, snag everybody, and go the other way. That's how you have to start to think. When your mind opens up to that and start thinking like them, you will start to make money like they do. It's that simple. Okay. Once the peak is identified, the trend bias will be in line with the peak for 3 days minimum. Could it be 2.5 days? Yeah. If they come in at the London session for the peak formation, they can go London, US, London, change in US. Because the 3 levels were accomplished, but it was only 2.5 days. Very important. It is safe to trade V bottoms and V tops if you have clearly identified the cycle direction and the trap volume move. If you see the W anchor point to the low, and it goes up, goes into consolidation, the next day if they issue a V stop hunt like they did last night, it was actually a W, but it came right back out and repeated the level as a V right at the London Open. It's safe to trade that V because you knew it was part of a multi-session W, right? Here. Where did it go? All right, I don't know what happened to the folder. It got buried in this this stuff. I'll dig it up on the break and show you, okay? I'll draw it for you, actually, just right here on the chart. Let's do this. Okay, yesterday, we knew price was dropping. It made the spike, right? And then it went into consolidation overnight. Okay, when London came around, here's the London, Asian, right, market maker channel, Tokyo channel. When they made this out of the box and came back, this is technically a V bottom. But it's part of a larger structure that forms this W. So it's okay to take a V bottom when you, in fact, understand the directional bias by the market maker. Okay? Does that make sense? That's what I'm talking about. The big picture, the big thing. Don't get caught up, which most people do, and I understand that, but what I want you to do is get out of that idea, that concept. What most people do, and I got to ditch the pen to get the slides back up. Okay. Is that you get jacked up in your little section of the chart, right? Okay, someone's saying the screen's black. I see my screen. Yeah, okay. Floyd, log in, log out, buddy. Okay, so here, look. Back to where I was, right? This is how it's usually going to play out. The W is going to form, and then it goes into consolidation. This is level 1, day 1. The next day, he might do this. That's okay to trade that. He's not always going to give you a perfect WWW every day. If he gives it to you, it's a bonus. Hey, Dave, I didn't see you, man. Nice to see you in here, buddy. If he gives it to you, it's a bonus. It makes it easier. Okay? That's what I'm talking about. I'm talking about that once the anchor point is set, then you, in fact, will understand the trend bias. Here we go. Anchor point, day 1, confirms second leg reversal, right? The second leg, or the multi-session W, spread out, confirms that the trend reversal is on. Okay, what do you mean, Steve? If he comes back for a second swipe at those people, and it's spread out like over a day or 2 days, let's say he hits the low Sunday, and it comes back in here on Monday. If he spreads that out over 2 days, he ain't doing that because it feels good. He's doing that because there's a ton of cash down there. And the way to get it is to go down there and pick up those orders and like scrape money off the sidewalk. So what happens is you get day 1, level 1 rise, right? Goes into consolidation. You have your 1, 2. You might have your aggressive move away. You might have a 3-day rise within the day 1. All right, hold on. You're going to love this. All right, time to go. At the end of the day, he goes back into consolidation to end the day. He starts the cycle over, right? He then will make a V bottom. I was expecting this. If he does this, more power to you. It's better. But he may not always do that. So it's safe to make the entry off the railroad tracks because you're going to have your vector. 1, 2, 3 right out of the box. You might get a pivot laying there. Yesterday's tracer. Some things will be laying there. ADR low. Might be laying right there and give you an idea that, hey, the stop hunt should stall right here and the reversal's there. And then again, you have your 1, 2, 3. You may only get 2 levels in this example. Right? If he comes out again and issues a V, I expect this. That's good. Now the expected move is this and reverse. Back into the range. What's the range? High minus the low divided by 2. It's going to be right about here. If it's a 300 pip move, you can expect about 150 pip retracement. Okay? The V could hit the mayonnaise. It could hit the watermark. Okay? That's the cycle. And it's the opposite cycle for the way down. Okay, now keep this drawing in mind. Okay? Now let's look at a chart. It's kind of funny. I drew it like that. All right? You have what we call a 33 trade on the last day. Okay? And I'm going to show you that. The 33 trade is a very aggressive day that guarantees a reversal of about 50 to 100 pips minimum. Here's why. Okay, isn't this pattern not only the intraday pattern, but it sets the beginning stage for the week? Right? Back into consolidation. Vector 1, 2, 3 to the low. Morning star formation around the mayonnaise can be construed as a V bottom or a W, depending on how you want to look at that. Right past the mayo. Why would he come down past the mayo and close aggressively past the mayo and then snatch it right back in one bar? Because it works. Hey, Wayne. It works because when they close below that, there's two candles below this, right? A retail trader would sell here and here. Some people say, oh, on a break plus a close below the mayonnaise, I take it. Some people say when I get a full bar below the mayonnaise, I take it. Isn't that funny how he did both? He issued a break plus a close and a full bar below the mayonnaise. Then he immediately stalled the brakes for 15 minutes, and then 15 minutes later, everybody is freaking stuck because one bar took it all back. Do you see that? Do you understand? It snatched it away from the traders. Okay? Our entry is in here after the morning star formation comes back to the mayonnaise, or a bar later in here. That's okay. And this trade moves nicely in, then it bounces, and it does what it's supposed to do to finish out the day. 1, 2, 3 to the high, end the day and chop, and then drift back into consolidation. Okay? Then what does he do? He does exactly like he's supposed to because we knew it was coming. Vector, tiny 1, 2, 3 to the low, 3 swipes to the low, issues a hammer, snatches it away, comes right back with a second leg, and then this is your 33 trade. Okay? I'm going to explain to you the 33 trade. The last day of the 3-day cycle will issue 3 intraday levels of rise. Okay, write it down. Or mark the tape. Whatever works for you. The last day of the 3-day cycle will have 3 days of intraday rise. 3 levels of intraday rise. I messed that tape up. Let me do it one more time. The last day of the 3-day cycle will have 3 levels of intraday rise. Okay? With little stutter consolidations. 1, aggressive off the low. 2, 3. Hit the stops. Notice the pins turned over. See the pins on the top side? It's day 3. It looks like stairs, right? Stairway to heaven. Man, it's like stairs. I see it, Steve. Do I know from the right part of the cycle? What time of day is it? How's his behaviors? Are you at level 3 rise on the last day? This is called a 33 trade. The reversal is imminent. You can sell on the hammer back into the range. First target's the water, second target's the mayonnaise. I promise you'll get it. Almost every time. Why? Think about all this money everywhere in here, right? Market makers had to buy off of all the traders. They had to buy off of all the traders, buy off all the traders, buy off all the traders, buy off all the traders. Right? They're running out of cash. They're running out of money right now. It's getting a little low. The last day, the 33 trade, you ever heard of the term pump to dump? They're pumping the price on day 3 of the cycle to create, oh my gosh, look at this uptrend, I got to grab some of that. That mentality that is everywhere in the retail trader's world. Man, look at that euro. I'm so sorry I missed that. Buying, buying, buying. They pump the price to buy from the traders, become net short heavy at level 3, day 3, and then correct the price and come out net positive in their cycle. Market makers buy from the traders or sell to the traders on an aggregate with the last level of the cycle being the most aggressive and heavy buying or selling. That behavior allows them to come out of their longs or shorts in profit. Okay? So now, this is exactly what I just drew for you in my little sketch. It's going to be there over and over again. Can they reset back to the mayonnaise and continue up? Yes, because I don't know what the seasonal target is for euro, and nobody else does except them. I don't know what the quarterly high is going to be in GBP. But I can tell you that at those price points, when it approaches the yearly high or quarterly high, a sucker takes a break of that long. And I'm going to show you in a chart coming up exactly what I mean. Okay? All right, so we're still good. We're understanding the trend, right? Here we go. Next slide. Identifying where you are in the count will simply help you project the next move. You've got to identify the peak formation to know how the cycle's anchored and where you are in it. If a double peak formation appears on a higher time frame, all I could say is lights out. You will make some money. Okay? Here's what I mean. Okay, this is the pound that took 3 months to set up. Okay, think about how crazy that is. 3 weeks, 3 months, all the threes in there. Look at the daily chart where it formed the high. Let me pull my pen. Here's the daily chart where it hit the high for the first time. That was the seasonal high. From September, October, November, right? It hit the high. It then had 3 levels of drop. And then it went back 3 levels of rise, and it came right back to the seasonal high. I promise you there's breakout traders that put their orders all up in here. They put big fat pendings. They were aware of this, and they went in there and they issued a big fat spike to the high and picked up those orders. Okay? They came near it again. Just so happened to be the Asian session where you're seeing this activity in here. Right here on the 15-minute. Have a looker. See it? Here's the 4-hour. November high holds. Market makers pinned it. They made the second leg of the M. There's the first pass on a 15-minute. Second pass on a 15-minute. Third pass on a 15-minute U.S. session. These guys are so freaking greedy because the bigger chart traders make up small institutions and hedge funds. They went back again because these guys were looking for the break. These guys were looking for the break on the daily above the high. Do you see how they went back 4 times, 3 times, once in London, or twice in London, once in the U.S., and once in Asia? Think about how crazy that is. If they pass up there 3 or 4 times, I told you, if they make that many passes at a price point, it's lights out. They made the swipes at the high all those times because there's a ton of money sitting there. Do you see the 1 hour is crystal clear? Yes. Look in here at the 1 hour. There's the pin to the high. Come near it again, miss it. Come near it again, miss it. Boom, boom, boom. And there's actually a little tiny more pass right in there. Notice the outside structure. The outside bar forms the high of the cycle, but none of the bars penetrated. That is a sell all day and twice on Sunday if the market's open. Okay? So understand. Boom, 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 game over. If you have an M formation on a larger time compression, such as this one, that took 3 months to form or 2 months to form, the correction's imminent, man. They will correct the chart to get paid. Okay? For 3 months, can you imagine this, man? Somebody took that break long at the railroad tracks in October, November, right? November 4th, that week. They were all happy. They probably thought they got a great breakout trade above the seasonal high. They were probably ready going to buy their wife a new Lexus for Christmas. They were all excited. Market makers snatched it away for 3 months right through Christmas and didn't come back until February. Man, if they were running a hedge fund, they had to open float for 3 months, had to pay swap every day. Do you know how crappy that is? I'm sure it ruined their Christmas. I'm sure they lost their bonus. Somebody was trapped long there. For them to come back to the level and pick up more orders 3 times? Yeah, somebody said she got a Hyundai instead of a Lexus. Coal in her stocking. Don't you see how dirty this is? That's why the regular technicals don't work. The breakout traders break above the seasonal high, break below the seasonal high. If they break above the seasonal high, you got to still get the right signals in the formation. Trading above and below the seasonal highs is a sucker's game. Don't do it. Instead, look for it to settle in and make the counter and take it back towards the seasonal number. Okay? Like we did in this example. This was good for 150 pips minimum at the seasonal high, okay? Okay, so the trend. How do you figure out the trend? It's the anticipated directional move needs to line up with the peak formations. It begins after the stop hunt. After you see the stop hunt, aggressive move, vector candles to the high, it sets in, pulls back, goes again, that's the peak formation. That's the highest point on the chart. It could be the highest point on the chart for the week, and you also have the peak formations intraday, which is the V tops and V bottoms. The trend move in Forex lasts 6 to 8 hours. The directional move is slow and steady. It's with all their money committed. Obviously, if level 1 is identified, the trade's going to offer more pips and can be converted from a spot to a swing trade. Let's say you see a peak formation low and you get in something, it looks good, and you're jacked up, and you're like, man, I kind of like this trade, and you scroll back and look at the 1 hour chart. You notice, man, it's been dropping for about 3-4 days. It settled in, it chopped around, it made a second leg. That looks like a big multi-session W. You're up 50, 60 pips. Lift your take profit, adjust your stop to break even. Convert the spot trade to a swing. Not everybody is suited for that, and that's okay. If you're not, take your 50 and look for another setup tomorrow. If you are, and you want to start taking swing trades, that's okay. But understand the swing trade lasts 2 to 3 days max. That's why a lot of times these guys take swing trades on Monday and they hold it and they're up 200-300 pips and they move to break even and never trail. And then by the time Friday rolls around, they come right back to the same level and end the week for no net change. And they had a 250 pip open float positive and they end up with a +5 or +25. That, my friends, is a crime. Okay? I'll talk about how to handle the stop losses in all conditions. Okay, look. Will all the time frame always line up? No. This is a retail trader's trap. Don't get caught by the market maker, man. You sitting here waiting for the 1 hour, 4 hour, all that shit to line up? That's a retail trader's trap. Okay? All right, I hate to keep asking this, man, but can everyone hear me? Is it just certain people are falling off? Okay, sorry. All right, thanks, man. Okay, thank you, Mac. Thanks. Okay, thanks, guys. All right, look. You got to have an open mind and trade in both directions and not be afraid. If he shows you stop hunt high, you're a seller. If he shows you stop hunt low, you're a buyer. Just be cognizant of where the peak formed. How far away are you from the peak? Is there profit to get back to the peak if you trade against the anchor spot? Okay? That's how you handle the trend. Now, a market maker uptrend can be labeled as such. WVVM. The counter trend back towards the peak is ill-advised on V1. This is V1 right here. First day of the reversal. The straightaway trade occurs here most often. Okay, I'll show you a picture, don't worry. Okay, if you're writing the slide, I'll give it a second. This is an important slide, by the way. This is what I mean. Day 1 of the cycle, a big fat W comes in at the tracer. I expect a rise. The next day, they issue 2 pins to the low in the shadow box. My gosh, it couldn't be any perfect. Here's the low. They cut it in 3 swipes, vector to the low. They end on pins right here. They make their move up. This could actually be construed as a big W. That's okay here going into the session. But here's your stop hunt low. What do you expect? Day 2. All right, one more day of rise. I expect them to stop hunt low right out of the box and rise. VW, VVM. The reversal's imminent. There's the railroad tracks to the top side. There's level 3 chop, level 3 chop, level 3 behavior. I know it's coming. Okay, do you see? Market makers took their money back against the trend very aggressively, I might add, too. Look at that. Look at these candles right here, man. Over, and you got out of that trade in minutes. Level 3 is the third day of the rise and the chop. Okay. The market maker downtrend can be labeled as such, MAAW, only because I can't make an inverted V on typing. I don't know how to do it. If someone knows how to do it, email me. The counter trend is ill-advised at A1, the first A of the cycle. Why? The straightaway trade appears most often out of this part of the cycle. I don't want you to get jammed. When you start knowing how to pick off the straightaways versus the counters, that's okay. You're going to get more proficient. But for the new guys, it's too easy, man, to start chasing crap and making up reversals and things that aren't there, okay? Just trade the easy stuff. Terry, every chart's 15 minutes, man. Always, unless I say otherwise. All right, look. M, anchor point formation. V, they come right out of the consolidation. Aggressive move. Expecting this. We expect one more. Pins to the mayonnaise is an easy pick-off. Then they turn the cycle around and make their money against the trend. They come all the way back to level 2. How'd you do that, Nelson? Email me. All right, somebody knows how to do it. That's the cycle. Okay? MAAW, WVVM. That's it. Just remember that. A 3-day cycle. 1, 2, 3. I'm out of cash. I got to reverse. It is beautiful to behold. I joke around like I have these pictures put in a nice frame with a matting around that's on my wall, got a little light. That's my Mona Lisa, man. Why would you ask if the class is recorded or live? You know I'm here. Seems like I went down. Did I go down? You guys still there? Yeah, okay. I don't know what happened. Almost like someone took control of my screen. Probably got a market maker in here. Okay. Very weird. All right, here we go. I said this. Will all time frames line up? No. Don't get caught by the market maker. All right, look. Midweek reversal. This is a 4-hour chart. Same thing applies. Same thing. One more swipe at the stops, end the week. Trap the traders long to go into Friday, come back, complete the cycle, back to the mayonnaise. Okay? The same thing over and over and over again. I promise you, when you start identifying this stuff and go back in the charts, you're going to laugh at yourself. It's been there the whole time. Okay? Think how many times you fell for that. Okay, let's talk about candlesticks. Candlesticks at the right context or right time of the market are invaluable for identifying what's happened. Understand that the candlestick is the footprint of the market maker behavior. It's your job to identify the market condition. Candles in the wrong market condition, to me and to this group, are meaningless. Certain candlesticks can be expected at the high and low of the day, and they are as follows. Spike candles, hammers, inverted hammers. Spinning tops, doji types, railroad tracks, high test, low test candles. Now, I'm not talking about gasoline and the cheap gasoline. Okay, I'm going to illustrate every one for you. I haven't left you hanging yet, have I? Okay, here we go. The vector candles. This is a term that engineers like to use. Zaim coined it and donated it to the group. Some people like it, some people hate it, but nevertheless, it just means a candle of magnitude, length, and direction out of nowhere. It's like when you sit back and look at the chart and you go, that don't look right. It just came out of nowhere. Big spike out of nowhere. 3 candles out of the box. That doesn't look right, man. Something's wrong. We know the chart should be a slow, steady rise or a slow, steady fall, but if we get 3 burst candles or a burst in price, something's wrong. The burst in price can come in one push, all inside of one candle. It can come in 3 candles, it can come in 2 candles, it can come in 22 candles. I'm going to draw it for you. Okay? The retail traders have been taught that this is called momentum candles, and they couldn't be more wrong. This is the candle that you say, oh, momentum in the marketplace, and gets you to chase the break or the wrong direction. It's simply an anomaly on the chart that would look like a breakout. It's like, oh man, that's breaking out of nowhere, it's moving. That's a vector candle. And it appears for no reason other than to get things moving tonight. Market maker comes on duty, and he's like, all right, how are we going to start this off tonight? Let's hit the stops low and rise. Vector 3 times to the low, bam, gotcha. The vector candles usually form the low or high of the day on the first leg of the reversal. Now, if it's a V bottom, obviously it's going to be just the first part of the V. But on a W, it's going to be the first leg of the W to form that. It's going to be the first leg of the M. Here's what vector looks like. Okay, what you do is, I told you, always measure the initial low of the day, because that's what these guys are counting. This is your break. This is your first candle to pierce the low, the initial low of the day, right? It doesn't say I love you. It's the initial low of the day. The first candle that pierces the initial low of the day is to get things rolling, to start the stops, to trigger the stops, to get the traders to take, right? Then what do? He spikes it. He hangs around for 30 minutes or so. He pushes it and breaks the low again, hangs around for an extra 15, and then taps it out to finish by breaking the low again. I'm going to illustrate this for you in a minute, nice and clean. I'm going to talk about the blue box. Yes, just absorb the concepts right now, my friend. All right? The 1, 2, 3 to the low is the vector pushes an extension of the low or the high. All right, let's look at it from the high side. Here it is again. An extension of the high. Steve, I only see 2 candles there. I understand. 1, 2 pushes can be contained inside of here, and the third push can be contained inside of here. But I promise you, measure this. This is, anyone want to take a stab at it? 25 to 50 pips above the initial high of the day, depending on the pair that it came from. Okay? Now, that would be an M top. Absolutely correct. Look, spike to the high, pull back, hit it again, just take it out barely, close below, and then shift it away to trap everyone up in here long, and then game over. Sorry about your luck. Okay? M top. Notice how you have a big outside bar that eats the whole structure up, and these bars trade inside and then shift away. Very important to note. V1 on the chart is not the same as Vector 1. Absolutely not. Vector is only to understand the speed and the movement of the stop hunt candles. Vector, let me see if I can clear this up. Vector identifies stop hunt candles. V1 is a stop hunt low rise. V2 is stop hunt low rise. Right? A1 is stop hunt high drop. A2 is stop hunt high drop. All right, see if I got that right. I know you guys are telling me it's going on in other pairs right now, but I don't want to talk about it. I want to focus on the material. Okay, look, this is very important. Candles represent, candles, bars, whatever, where price has been. When the candle paints and closes, the damage is done. Market makers got what they needed. So when they issue a pin, right? Think about this for a minute. Okay, I've been talking about this. Everyone keeps asking me, what is a pin? When you see the pin, when the pin is issued, the money is grabbed all in here. Because after all, this was a solid candle that started out like this, right? And then what did they do? They closed it like this. And the pin's issued. When the pin is issued, they've got the money. So you have to ask yourself, okay, the pin's been issued towards the high. They came out of the box, 50 pip channel. They cut it in 3 swipes. They ran that candle straight up and pulled it all the way back and snapped it back and closed way below the high. The damage is done. They grabbed the money they needed. That's what you have to understand. Okay, now let's go over the high-low board and understand how they extend the high or low. I made an example of how they extend the high. Okay? Here's what happens, okay? We know that they will extend the high in 25 to 50 pip increments. The activity takes 30 to 90 minutes when the high is reached. Okay? So here's what happens. The initial high is 61.60 sometime between 1 and 4 a.m. New York time, Eastern. The times vary because they don't want you to figure it out. The initial high was 61.60. Craig's group should easily pick this stuff up. 61.60 is breached immediately with an aggressive move, and there's a little bit of a pullback in here. Okay, 1, 2, 3. The initial high is extended from 61.60 to 61.84. 24 points. Okay? They quickly pick up the contracts and get out of that area. Price would drop down to like 61.70, 10, 15 pips off the high. So if you're watching the board, you'll see the number change from 61.60, and in the blink of an eye, it'll swipe 20, 25 pips. Depends on the pair. In the GBP pairs, the first swipe out of the box is about 25 pips. They make the one swipe out of the box about 25 pips if they know they're going for a 50 pip stop hunt. Think about it. If it's in 3 swipes, we got to break the 50 pips down, divided by 3 into 3 swipes, right? The swipes are not equal. The swipes are a trick, part of the psychology of 3. So how do they do that? They'll make the first break 10 or 15 pips. On this example, I'm sorry, I did 24 pips. 10 or 15 pips, right? They'll hit it quickly. Bam, 10 or 15 pips right out of the box. Gets the ball rolling, gets everybody excited. They'll pull back and they'll hit it again. If they did 15, they're going to do about 8 on the next hit. Then on the very last piece up in here, they will tap it 3 to 5 pips. The 3 to 5 pips plus the spread is just enough to annoy the shit out of you and take your money away on the stops. And it's just enough to pick up the pendings if they're structured on the other side. Okay? Now, they quickly pull away 10 to 15 pips off of that number, the new high of the day. Right? You have your initial high of the day, 61.84 becomes the high of the day now. They pull back. Immediately 15 pips to trap the long holders and to evaluate and see what they got. They turn around and make the second pass from 61.70 right back to maybe 78. With the spread, it's 81. Not quite to 84. Why? If they go to 84, 85, it releases the traders. So they'll hold right around 78, right up in here. The traders that are long here are still stuck, and they're doing the, oh, I got it, baby, it's going, it's going, it's going, and hold on. It comes in as a near miss of the high. Now, variation on that could be the pin goes above 84 and comes right back down and closes here as a hammer on the second leg. But they'll hold a number at 78 by 81, 78 by 80, 78 by 81, 82. You'll see it. If they're working the spread widens and it becomes 78 by 86, 78 by 87, but the 78 doesn't move. That's a hold. The sell side is open, trying to pick up the orders. That action traps the retail traders, gets them to fall for the crap and validate their patterns that they've seen in the textbook. Okay, so now, sometime between 1 and 4 a.m., they're going to break out of the box. Let's say our bias is short. Let's say we have peak formation here, and they come in, consolidate. They had 3 levels of drop. 1, 2, 3. We expect the same behavior tomorrow. They come out. They issue vector candles. Understand this swipe can be one big fat railroad track and then fall back like this in 2 moves. There's your entry, or there's your entry. It can just be 2 big fat candles straight up, one straight down. It's variations on the theme that you have to understand. The job is to get the traders to fall for it. That's why it's mixed all the time. It's disguised as different things. So now, if you're watching the big board, the high goes from 61.60. All of a sudden, you'll see it blink. Bam, they hit it. It goes to like 61.72. Bam, they hit it again. 61.80. And then they tap it 4 or 5 pips for the last time 61.84, the high is formed. They quickly get off of there and drop down to 61.70. Traders that don't know anybody go long here on the pullback. They go back towards the high but fail to break the high of 61.84. They perhaps open the spread and go 78 by 85, 78 by 86, but the high holds. Identified by the way the candle closes, it ends in a hammer or ends in a spike or a pin. They then shift the zone away from the higher level traders. Our entry is here. Around 61.78, 61.75 with the spread, you grab yourself a nice position. 61.74 would give you a 10 pip range to the top of the formation. Add a few pips for good measure for the stop. I'll talk about that. There's your entry. Stop loss is right here outside the range. We'll talk about this. Still, stop loss. Just understand that's where it goes. Okay? When the high of the day holds after the things that you need to see are there, okay, let's see. Let's back up now, okay? 5 p.m. Do I got to do this? 5 p.m. high-low reset. Boom, boom, boom. Trade in the range. Widen the spread. Between 1 and 4 a.m., you have your vector times 3. 1 push, 2 push, 3 pushes to form the high of the day. Same for the low of the day. It can be 1 candle straight up in 15 minutes, an aggressive move towards the stops. It could be in 3 candles. It could be in 7 candles. When they do it in multiple candles, this is how they do it. They'll go up, break the high, trade sideways within it. Hang out there, hit it again. And then maybe tap it again. And then reverse. Same thing. The only difference is they added 45 minutes in the middle to piss you off, confuse you, because they were accumulating contracts and seeing what happened. Okay? They could do the second candle, not take out the high. Let's say this candle was like this, and then trade inside here, and then hit it one more time. The last tap is always mild. The last tap is always mild before they make the reversal. Why? Just enough to not spend any more money than they have to, but to pick up the stops and grab the orders on the other side. Understand, there's some type of money sitting right here, right? So when they come back in, they just go up there like this and grab it and turn right back around. And they say, sorry about your day. They really don't even, not that polite. They don't even say that. But that's how they grab the orders. Now, you get the revert. Our entrance is here. They shift the zone in one bar, 15-minute, nice 15-minute drop. All these traders in this structure are jammed now for the cycle. And when they shift the zone in a big 25-pip move, that causes the panic, the lift the stops, the quick turn on the news. Where's CNBC? Let me kick my dog. I can't believe I'm down again. That causes all those emotions and behaviors, and it makes you start to think irrationally. Okay, that's where and how they handle that to make retail traders do that stuff. To make the bad decisions, to lift their stop loss, to do stupid things with their equity. And the bottom line is they end up pocketing it. That's their job. If you understand this is coming, then your job is to wait for this structure to develop and trade it. If you understand the second pass is coming, then your job is to have the perseverance and the patience to wait for the second pass and trade the second pass. I can tell you that if you become proficient identifying the M's and W's and wait for the second pass, you will be 10 out of 10 for the week. The discipline lies in waiting for that, and I can't teach you that. I can teach you what to look for and how to see it. I can't teach you to sit on your hands until it develops. I can't teach you to be patient until that triggers. That's on you. I can show you exactly what these guys do, like a roadmap to success. It's up to you if you get on the path and follow it. I want that for all of you. Once you understand and start seeing this stuff, you can literally telegraph what these guys are going to do and project the market, and you look like a crystal ball guru. Okay? All right, good stuff. When a spike candle at the appropriate time is extending the high or low for the session, what I just illustrated for you. When it is pulled back, the high or low is now formed. So when a spike candle at between 1 and 4 a.m. or let's say at 3 o'clock spikes the high or low, let's say the high, and pulls back, you went from the initial high to where this candle came to rest, or the peak of the candle came to rest, the high point of the candle. Right? Spike candle. Boom. Like this. Spike straight out. Maybe has a wick on the top. You now have formed your high of the day. Right here. When it's pulled back off of here, pulls down, you now have your high. This pullback is this forming up. Remember, I learned to trade by the numbers. I didn't learn to trade on the chart. You guys have a major edge. The guy made me look at the board and told me, okay, like the numbers I illustrated for you, that's how I learned. And I got to tell you, it's frustrating as hell. This is easier. When they hit the number, like I showed you, the 6184, right? When they pull back to 6170, that's forming the 2 point on a 1, 2, 3 setup, right? And then when they spike back up and fail to take this out on another candle, that's how the setup is laid out. That's how it's starting to play out. It's simply this. When you have a number locked, let's say 6184 is the high for today. When they come near 6184 and fail to break it, that's your high retest candle or your high retest point that allows them to absorb those orders that are needed for them to pocket some cash. So when they come near that, when they come to 6178, 61 70, 81, but they don't take it out, the near miss ensures that you're at the right point of the chart for the short. The near miss is part of the signal system for you to understand the signal's coming. The near miss is part of that. Now, if they take 6184 and breach it to 6187, now you have to understand, where do they close? That's the next question. All right? If they come in here, this is where people say, oh, what about this, breaking this? Here. If they come up here to 61, I'm going to just use lines. 6184, and then they pull back, and they start on the second pass, and the second pass goes above and hits 6188. That's a mild 4-pip extension of the high. Add the spread. It's about a 8 or 9 pip extension of the high. Now the next question you have to ask yourself, did they close back below after they tapped out the stops? If the answer is they closed below after tapping out the stops, the high at 6184 is still valid. The trade is good. Because the 6188 tap was to pick up the orders that they couldn't get that were sitting up there. It might be like 6190 because it's a round number. People trade that. You might see it go from 84 to 90. When they open the spread, they grab the orders at 91, 90, 91, 88, like that. Understanding that is added confirmation to your trade when they make the near miss. That's the high retest candle, low retest candle. It also forms the second leg of the formation. This structure is a 30 to 90 minute ordeal. How do I mean 30 to 90 minutes? The clock starts 30 to 90 minutes when the first high is formed on the vector candle to the high. Okay, now, when they spike it to the outside, pull back, and they tap above and stay up there, if they close above the 6188, the candle turns green and closes above, that's not the high anymore, is it? 6184 is not the high, 6188 is the high. You need to wait and see what happens. Understand? Wait and hang around and see if the next candle issues a railroad track and comes back below the previous 6184. Okay, you guys with me? You okay? The board's scrolling a little fast for me. Just want to make sure you're okay. Okay, good. Understanding how they handle the high and low is the whole business. Remember, I told you the high and low is the whole business. Understanding how they handle it is going to help you get in the right direction. Okay, the 30 to 90 minute time frame, very important here. The 30 to 90 minutes starts when the high, 6184, is set. When 6184 is the high of the day, the clock starts here. This time horizon is 30 to 90 minutes. Why? Because they got to go down, back up, near miss, and turn over. This structure takes 30 to 90 minutes, but up to 2 hours can be seen for this to develop. Okay, now, from the second leg, time horizon, from the second leg time horizon is 2 hours from entry. 2 hours right here. Okay? If you are not in substantial profit and it's chopping around and not moving, stop yourself out and get out of there. Excuse me. Hope I didn't cough in your ears too bad. You know what? I need a sip of Diet Coke. Hold on. Okay, back. All right, so listen. You enter the trade right here on the pullback off of 84, around 78, 75 with the spread, right? You're in. You start the clock. You have a 2-hour time horizon where if they pull away and go into consolidation like this and they don't move the trade, something's wrong. Ed, you asked me, I don't know the answer, man. Something's wrong, right? You start the clock on your entry second leg, something's wrong. The contracts aren't straddled in the way that they needed. So you got to scratch yourself out. Ed, I mean enough room to move your stop to break even. You should be up 25, 30 pips, 35 pips. And if it's chopping around, if the trade doesn't go in your favor right away, something's wrong, right? You'll get used to it and you'll see, but I promise you, you'll get your plus 50 so quick you'll think something's wrong with the platform. If you're the kind of guy that's been nursing trades and taking multiple orders and hanging around, and then you lift your stop and you sit there for 3 days, you're going to freak out when you hit your take profit in 45 minutes. You're going to be like, man, that was really easy. What the hell just happened? Nice to see you, Arnie. I didn't see you earlier. Understand what I'm saying? You're going to get a shift of the zone, which, remember when you've been in a trade before and they shift against you and you're down and you're sitting there? When they shift the zone, you're going to be in profit. And that's what the traders don't understand when I explain it to you. You're going to be in profit so fast, like last night, after they railroad tracked to the low, they shifted right away from that area. Why? They had so much money trapped low, they got to get the hell out of there. They issued 3 vectors back into the range. You were out in 15 to 30 minutes. Understand? It's fast. When you grab the trade, it's so quick, you're going to think something's wrong with your computer or something. You're like, holy crap, did I just book 50 pips in 15 minutes? Then what's going to happen is you're going to feel like it was too easy, and then you're going to hang around and make stupid trades and give it all back. That's what's going to happen, I promise you guys. Don't do that, I'm telling you. If you book a profit on an easy setup in 2 candles, you see the railroad tracks to the low and you take it, and in 2 candles, 30 minutes, you're out plus 50. Don't hang around and keep guessing and chasing it. That's what's going to happen. All right, look, I just realized I went a little over. We need a 7-minute bathroom break. We got about another 45 minutes, then Carl will be in. 30, 45 minutes, depending on how I go, okay? Let's do a 7-minute, and I'll keep talking about these vectors and this setup. This stuff's important, man. Listen, identifying the pattern, identifying how they handle it, and identifying where you're supposed to take the entry and what it's supposed to look like is the whole business. Once you master this stuff, you own these guys, man. So let's do a 7. We'll be right back. So, all right, so we're trying to understand how the high or low is formed, right? So they hit the number, they pull back 15 to 20 pips off of that number, go near the level, and fail to break it. That's your setup. Okay, same thing for the downside. They'll spike to the low, pull back 15 to 20 pips. That forms the hump in the middle of the W or the M, right? The pullback right here on the board forms that hump, which if you understand how the 1, 2, 3 trade set up, that's what they're doing. That's how they're working it, okay? Important stuff to understand. The retest candle is when they come near it to pick up those orders, okay? We call that a high test, high retest, or low retest. I have some pictures for it. Let's see. All right, we covered that. Okay, now, with that in mind, the following candlestick patterns need to occur at or near the high and low of the day. What happened? The clock's still in the way? Okay, yeah, I think you asked me about the clock. All right, here, let's go here. If the structure takes 30 to 90 minutes to build, but up to 2 hours, if you're on the first leg and the trade doesn't move into profit in 2 hours, you scratch yourself out. If the second leg presents 30 to 90 minutes in and you already started the clock, restart the clock on the second leg, and the time window is 2 hours. Okay, if that trade does not shift away from your entry and go into profit, if it's teetering back around between +1, -5, +7, and doesn't move nicely, scratch yourself out. All right, one more time. Last time, Whitney, pay attention. Roberto, okay. If the first leg, how about this? How about a pitcher's worth 25 cents? I'll draw it for you. They spike up and pull back. You took the entry right here. No problem. Okay, you start your clock, 30 to 90 minutes. You expect them to come in and do something else. Forget about the 30. It's 90 minutes, unless it's railroad tracks. They pull back. They hang around. This goes on for an hour and a half, which is equivalent to 90 minutes. The trade just sits there and doesn't go into profit. Scratch yourself out of the trade and take what is given at that moment in time. There is no chart, Floyd. I'm drawing it. Remember, they test you with time and patience, which retail traders have neither. They're trying to juggle trading between a job, and they don't have any patience. They want it to go into profit right away. Thanks, Abe. Okay, so now, if an hour and a half elapses and doesn't do anything, 2 hours maximum. You're going to know when you start trading these. I promise. The example I give you is the last 2 nights. They shifted. They got the hell out of there so fast. The trades were up big in the blink of an eye. That's how your trades are supposed to go. You're not supposed to nurse a trade for 3 or 4 days. That's not the business. You're supposed to be up in profit in a bar or two. When you grab the right price points, you'll be in profit quick, man. You're not going to sit there going, oh, man, it's consolidating. I don't know if I'm in the right spot. You're going to learn. You're going to see what I'm talking about. I promise. I promise. I promise. It's there. All right, so look. Hour and a half, 2 hours. Yes, if you're losing, you scratch yourself out because I don't want you to throw any more pips away than necessary. Okay, now, if your clock's about to expire and they make a break back towards the high but fail to break the high and form out the second leg of the M, the clock starts over from here. You give it a 2-hour time horizon. I promise you, if you got second leg, you'll be in profit in 30 minutes. Isn't that like Pizza Hut, 30 minutes or it's free? Right, Dave just wrote, shift candles, 20 pips on average, green. The trade goes green. They shifted away 20 to 30 pips off of the high or low quickly into your favor. Gloria, you know the answer to that. If the second leg breaks the first leg, pay attention. You've heard this 4 times. You know the answer to this. If the second leg breaks the first leg, now it comes down to this. First of all, you have your stop loss in place. If your stop has not been triggered, do not let the market prove you wrong. You are smarter than a fixed position on a chart. The answer is this. How do market makers handle the high and low is the whole business. If they close above and stay above, you're probably going to get stopped out, so take it at 10 pips instead of 20 pips. If they open on the next candle and railroad track back inside the range below the previous high, your trade is still valid. I don't know if I can make that any more clearer. Good, Gloria? It's how they handle the high and low. If they cut the high in an aggressive move, or cut the low in an aggressive move with a big fat candle, you're going to get stopped out. Why would you sit there and wait to get stopped out? Why not take a minor loss and recover on the next strike zone? Glory, if they close above 3 pips, you got to wait and see what the next move is. 3 pips is not going to be much, obviously. 3 pips plus the spread, you're down 5. If you're down 5, you got to wait and see if they railroad track back inside the range below the previous number, or back inside the range above the previous number if you're trading off the W side. It's how they handle the high and low to pick up the orders that determines if the trade is still validated. Okay, good stuff. Okay, the certain formations that appear at the right time and distance from the blue box, the vectors, gives you the highest probability setups. Let's look at what these candles should look like. Okay, this is exactly the way I've illustrated it for you. Here's what happens. Where's my little ballpoint? Okay. They vector to the low. They issue a hammer outside pin structure on the mayonnaise. They consolidate for 1, 2, 3, 4. How long is that? 1 hour. They consolidate off the low for 1 hour. They then spike back towards the low, but fail to take out the LOD, and then they immediately get out of that area. They consolidate. Your entry is here on the confirmed railroad track. The trade goes into profit, plus or minus a few pips right off the bat, and then in 45 minutes you either hit your profit or you're well on your way. Stop loss goes right here below the low. I'll talk about where the stop loss placement is tomorrow, probably. Okay? This candle that comes back, it's like almost testing the low, right? You know, we talk about support and resistance in the business, and I can tell you the strongest support point is the low of the day. The dealer hits the number and says, no mas. Now, you like that for you Spanish guys out there. The dealer says no more. That's the price. I can't go another pip lower because I might let some money out. That is why you have a variation of highs and lows from dealer to dealer. Because that dealer that didn't go another pip below, but another dealer went 2 or 3 more pips below, his stop orders or a certain amount of orders, maybe he was going to pick up more longs. He didn't want to activate those because he knew he was going up. So he stops right there. He's got everything he needs today. No more. He comes back and he comes near it again. So isn't it safe to say that this is the strongest support there is and the high of the day is the strongest resistance there is? Because the dealer doesn't want any more. Right? There's your entry. Bam. Beautiful setup. Okay. The high test candle. You have your vectors. Here, look, extend the box out. He moved a little later. There's your 3 pushes at the high. He cuts the high in 3 moves. There's the price point. That's resistance for today, right? I'm going to start doing that. The dealer hits 61.92 and he says no mas. He pulls back quickly for 30 minutes. He works it, right? Hangs around, validates the orders. He pushes back up. Understand this was green like this at one time, right? He then comes right back below and closes down. The high is still intact. He then shifts the zone away from this structure and traps everybody that got jammed up in here, consolidates, accumulates more contracts on this anticipation. He has built enough of a float in here to be profitable for the day, and then in one candle, he's sorry about your luck, but I need to make some money here. He shifts the zone away from higher level long holders and makes them cry. You will almost be out. By the time it hits here, you should have your plus 50. How do you know, Steve? How could you measure? Because this range is 60 pips, and if he's above that and comes below it, that's way more than 50 pips. You're out. Spread and all. Okay? I hope you see the beauty and the simplicity of all this. It's crazy. It is. It's like artwork. Understanding how the dealer traps the traders is essentially how he handles the high and low, because that's where the traps are, is the whole business. Okay, let me go back and clean it off and comes back, because you're asking where the entry is on this. The entry is anywhere in here. You have vector to the high. There's other reasons here. Maybe the tracer's not on here. This is your M formation, my friend. Here or here on the inverted hammer close below. TDI should already be gone because the closes are averaging lower. You might have a shark fin. Michael, I'm sorry to hear that, but welcome to the family, brother. I've been trading 10 years and never saw this, Michael said. Now that you know it, you can't unknow it or unsee it. I wish you well, my friend. All right, here it is again, a blow-up of it. This is a hammer, quasi-hammer, hammer, right? We're talking about the candlestick patterns. A hammer is better when there's less of a wick on top. But understand that after you have three vectors to the high and you got a group of hammers, notice the pins are to the top side. Remember I told you the area he's trying to work is where he throws the pins. So if you identify that he's throwing the pins to the top side after he cut the high, man, you got it. He's got everybody else, and you got what he's doing. Yes, Susan, if it happens earlier than between 1 and 4, it's still okay. But understand that if you see the first hit in the Asian session, chances are at 3:30 in the morning he's going to come back in the second session and hit it again. That gives you a very solid confirmed double top high or double bottom low, M or W. That's a better trade than trying to grab it in the Asian session because it doesn't move much during that time historically. Now, I know there was a nuclear meltdown, a lot of stuff going on. Tsunami almost broke the nuclear shell reactor. I understand all that, and you get these anomalies in the chart where they move. But as a whole, the pairs move mostly during London and the U.S. session. I've met a lot of people that wake up 4 a.m. and trade 4 a.m. to noon. If they miss the move, they miss the move. Thank you, John. I'm glad it's making sense to you, man. When this dealer switches the pins to the top side, he's going to open the spread up in here too. That's your clue also. All right? Good stuff. Pins to the bottom side. If he's working the low, the pins are going to come in at the bottom. The pins are going to come in at the bottom out of nowhere. Right? Typical shoulder, head, shoulder. Level 3 behavior. He dropped down. He spikes the low in an aggressive move. What happens with those big spike candles, maybe they break them up on the 5-minute chart into 3 pieces. If you're trading that garbage, stop. Here, let me clean up my drawing. Back to here. He'll break this into 3 pieces on a 5-minute chart, right? 5, 10, 15 minutes. You're concerned about this stuff right in here, how he ends. Okay, now look. The initial low was set, right? This was the low of the day on the spike down after he came out of the Asian range. He spiked it crazy and pulled back. Okay? He comes back. Gloria, pay attention. He comes back and runs a pin all the way down there and then closes all the way up here. He's not satisfied with the work that he's done. He needs more money. He does it again. He goes all the way down and comes all the way back up above the previous low. Understand? Not allowing traders to book a profit. The spread gets opened up in here. Now he comes back for the second pass, and it's lights out when he shifts the zone right here. In 3 bars, 45 minutes, and takes back all of this money in 45 minutes. This went on for hours. Do you understand that? When he shifts the zone in 3 bars, he just beat the crap out of everybody that's been trading for the last 15 hours. Yes, it's a variation on a triple bottom or triple top. Yes. The center happens to be the head is longer than the two shoulder pins. But yes, that's what it is. Notice in here you got vector to the low, 3, 1, 2, 3. This stuff makes traders go, oh, look at that, it's going down, sell. I had a friend, I think he's in here, from California, Dave. I won't say his last name, I don't want you to bother him. Used to fall for this crap all the time. He was excitable guy, I love him. I can tell you he doesn't fall for it anymore, and he consistently books an exorbitant amount of pips. Almost as much as a Subio. Dave, if you're in here, buddy, I didn't see you. Thought I saw you earlier, yesterday, I don't know. Happy to have you. He used to scream on the spikes and get excited that we're missing Australia and it's going. Hurry up, it's going straight up, we're missing it. That behavior is exactly what they're trying to create in your head by showing you that aggressive move. All right, same thing. Railroad track spike to the outside. Right? They come in 1, 2, 3 to the low. They hit it. They get the hell out of there as quick as they can by one shift away. This structure forms out, right, the W. Don't you see it now? It's okay to take the trade in here. When they come back and fail to take it out, they're trapping. Snatch it away. Sorry about your luck today. Evening star formation. This is one of my favorite candles, and I'll tell you why. They go, oh, it's indecision. Look right here, look. You know what that is? That's an extra 15 minutes to take your money away by the market maker. Sorry, but that's what it is. That's the truth. When he hangs around right near the high, think about the railroad tracks. 15 minutes up, 15 minutes down. Right? That's a 30-minute anomaly. He goes, we're high, let's hang around for a few minutes. So he adds 15 minutes to the structure right here, up and back down. He adds 15 minutes to the structure in the middle, and he induces traders to take the longs. There's no indecision by the market maker. He knows exactly where he's going. They call that indecision, the bulls and the bears are fighting it out. No, they're not. They're losing. The market maker's winning by hanging around for 15 more minutes and taking your money. Same thing for the Morning Star. Same stuff. That's an extra 15 minutes in there of the structure for him to take the money. That's all that is, nothing else. Don't forget it. Railroad tracks. You guys keep asking me, how big do they have to be? Australian, they're going to be 10, 15 pips. GJ, they might be 50 pips apiece. 50 pips straight down to 50 pips back up. You'll know the structure when you see it. You got to get some time in front of the screen and recognize it. When the railroad tracks come in at the high of the day or the low of the day, that's what you're concerned about. If they come out and break the pattern, go look at last night's Euro CHF, GBP CHF. That's what they did. The railroad tracks came right out of the box and set the low of the day. They repeated the level from yesterday. That's what we're talking about here. Doesn't matter the length. It's the behavior. Don't get caught up in, how big the railroad tracks have to be. I don't understand. I mean, don't trade two doji crosses and say, Steve, they look like railroad tracks. That's not what I'm telling you. I'm telling you is they're going to make vector to the bottom, and they're going to come right back out. Different lengths. It's the behavior. Watch the development of those, and you will understand. Okay? The wick sizes are irrelevant because the wick sets the high of the day and pulls away from it. It's the behavior with the pattern. That's what I mean, all right? What do I mean when I say railroad tracks? It's thought that this looks like a set of railroad ties, I guess, and then they lay rails on this, right? That's where railroad tracks comes from. I didn't make it up. It's not my term. Let me find here. Couldn't you picture like all these coming down, then you would lay your rails right here and you drive your little pins right there, your little plates if you were a railroad worker? Not that I ever was. See what I'm saying? That's where railroad tracks comes in. They look like railroad tracks. Or these could be the rails. You just now got that, Lou? After all this time together? That's where it came from. All right, man. Have some imagination. Okay, look. The doji forming the high of the day or the low of the day is held for an additional 15 minutes. It allows the dealer to flash across or grab a few more contracts. That's what's actually going on. The evening or morning star holds the level and opens the spread, which induces traders to take the continuation. Hammers, inverted hammers, used to activate the pending and trigger the stops. Okay, I'm giving you the real definitions of these candles, by the way. If you don't want to know, I'll go slow. Spike tops, spike bottoms, it's to trap and create drawdown. Immediate drawdown. The railroad tracks, get in, grab your money, create immediate drawdown and panic and get the hell out of there. That's what they're for. Stop thinking like a retail trader. Think like a market maker. Why would I add an extra 15 minutes at the top of the formation if it's a doji? I want to pick up some cash. I mean, that's what I'm in the business to do. Why would I throw a hammer, inverted or regular? Why would I spike a hammer to the top? I want to pick up those pending orders on the other side. I want to trigger the stops of the people that got it right. I don't want them to make money. Same thing for a spike top or spike bottom. I got to trap the traders short, snatch the market away, and put them in the drawdown and scare the crap out of them. Make them start doing stupid stuff so I can end up with their account. After all, that's my job. I get bonused on that. Understand? Good stuff, good stuff. All right. Is anyone still writing this? I'm going to move on. Carl, you're up in about 10 minutes if you can hear me, buddy. Maybe a little less. Okay, got it. Thank you, Susan. Somebody got it. Alan, thank you. Sam. What is DD? It's not what you think it is. It means drawdown. Shame on you, John. I read your mind. All right. Market makers induce traders to take the wrong directional move by sharp, aggressive price changes at or near the high and low of the day. I drew it for you, right? The patterns will almost always reveal a reversal unless they time out. If the pattern times out over 2 hours, you scratch. Why would the pattern, that behavior, fail? I don't know. Somebody loves me? Thank you. My wife's not going to be happy. Because the trap volume does not exceed the total value they were seeking. So you can expect an extended stop on, oh, it's Karina, hey. You can expect an extended stop hunt, how far? 25 to 50 pips to the next level. Okay? Peter, it's an art form. You got to look at it. So if the pattern fails, it times out. 2 hours and it doesn't show a profit. I could tell you that if you were trying to grab the reversal on Monday's tank when it dropped, it stalled at the U.S. session when the consolidation coming into the session changeover. If you tried to trade that back, which you're not supposed to, by the way, count the bars from where the entry appeared and you should have timed out. Nick, I'm going to give you every single pair and every value. Hang in there. I didn't know it was you, Karina. Thank you, Bruno. I like to think it's good stuff. It's making a lot of people wealthy. When the trap volume is not met, the market maker has 2 moves left. Think about this. You're in the trade. It's not going your way. 2 hours is about to go off on the alarm. What does he have left? Hit the stops and rise. Hit the stops and fall. Right? That's one move. If you're in a short, hit the stops and rise to the next higher level and then drop. Or, remember that Australian chart a few charts back that he extended the high for a longer period of time and hit it again? He can hold the level and work the crosses and come back to Australian later. He doesn't give a shit that you're in that trade. He moves it when he feels like moving it, when the money's built up for him. Not because you got to go to bed or it's time for you to get your clothes on and go to work. He don't care about that. He cares about money. So if he holds the level for an extended amount of time, it doesn't mean the trade's necessarily bad, but I want you to take it off. Why give him the opportunity? The criteria has broken down. If you get stopped out, you wait 2 hours. 3 candles vector, 45 minutes. First leg pull back, 30 minutes. Second leg comes in, 15 to 30 minutes. 2 hours. Look for the entry. Next level settles in. If you get stopped out, come back and evaluate the chart in about 90 minutes and then look for your entry about 2 hours in. The time element. He's testing your patience with time. Something that no trader has because you got to go to work, your kids are screaming, you're tired, you got to get up early tomorrow, you got to take a nap, whatever. The time element is something that very few people realize and is overlooked all the time. He does it to bust your chops, man. Okay? The moves are carried out over a time interval and induce traders to take positions even when they're not ready because you feel like you've got to get something going. Forces you to make up stuff. Okay, if you're caught by the market maker by this move, wait for the next rise or fall. Minimum of 2 hours. Now, here's a very important note. If you took the move in London and he snagged you, and it's coming up on the U.S. session, the red box is starting to show up, wait for the changeover. Okay? If he snagged you and it's the end of the day, get your money back in London. Don't jump on something to try to get back at him. You're not going to win and beat him by trying to get back at him. You're not here to get even, you're here to get paid. Okay? You're in a trade, you get stopped out. Next level strike zone, 25 to 50 pips higher. The pattern appears, minimum 2 hours. If you're close to the session changeover, hold and wait. Wait for the session changeover. When the session changeover appears, look for a fresh set of signals. W formation reversal, M formation reversal back into the range. Breakaway trade or straightaway trade continuation if you're at level 2. And take it. You'll make your money back. If you control your loss, you'll end the day net positive. If you don't let the loss turn into a big, ridiculous move, you'll end net positive. Am I talking too fast? Someone says, pop a Diet Coke. I don't know. I'm jacked up, man. Having a good time. Hope you guys are enjoying this. Okay. It's a good point to see. Car, are you on tonight? Are you here? Anybody let that guy in? Do I have to give control over to him? How does that work? His mic is still muted. Somebody unmute Car, please. Organizer.
Yeah, I'm here.
All right, beautiful. All right, listen.
I'm here, Steve.
Okay, hang in there a minute. Some of you guys know Car, some of you don't. He's a fantastic trader. He does the free sessions on Sunday night going through the levels. We call it Counting with Car. That's as funny as I could get. Counting cars, I don't know. Counting with Car. All right, what he's going to do now is a lot of guys don't know how to mark up the charts. He's going to spend the next 45 minutes, takes you to about 11 o'clock, of marking up the charts. If you are a veteran and have been here, you can go to bed now. I'm not going to say anything else. You're not going to miss anything else if you've heard Car and you're part of the sessions. Wayne, how you doing? Okay, listen, I'm going to shut my mouth. He's going to go till about 11. I'll give you the homework when he's done, what I want you to do tonight. Remember one thing. Do not submit homework to me after 4 p.m. Eastern time tomorrow. I won't have it done in time. It's not fair for me to get up, try to eat something, and get grade homework right before. I'll be up all night looking at it, and all morning I'll go to bed. I'll get up, do some more. But don't send it to me at 5 minutes to 6 and go, why didn't you do my homework, Steve? That's wrong on so many levels. All right? I'm having a great time. I love you guys. I'll see you tomorrow night. I'll be back in here at 11 to go over the assignment. Car, it's all yours, buddy.
All right, thank you, Steve. All right, guys, welcome. I'm sure you guys enjoyed the class with Steve. I did. It's always amazing. Every time I attend the class, I learn different things. And I always attend every single class Steve does, because you never know what he comes up with in terms of insightfulness. So I'm sure you guys are seeing my screen right now. All right. So very quickly, what I'm going to do is show you guys how to do the homework. Okay. So normally I start off with the 1 hour chart. Okay. So you know what? Before I do that, for the new people, let me introduce myself very quickly. I met Steve at the old venue. And Steve was actually a teacher, and I personally believe in destiny. So what actually happened was I was supposed to be in Budapest for vacation, and it just so happened that the ticket between the day I bought it to the previous day was significant. So I said, you know what, I'm not going to go. And I called up the company and I said, hey, I need to take a class. I got 3 days, I want to take a class. They're like, all right, cool, you've already paid for the class, you can attend this class. They said, yeah, this guy is teaching, his name is Steve. I'm like, is that guy any good? I've never heard of this guy. I mean, he's not like somebody that I know from CNBC or something. So they're like, nah, he's pretty good. He talks a little too fast, he's jacked up on Diet Coke, but he's pretty good. So I think, all right, cool, I'm going to go attend this class. So so I walk into the class, and there was about 20-odd people, 20-something people there, and I sit. And the guy goes, Steve starts his speech, and he goes, okay, man, do you guys want to make money? Or do you guys want me to teach from the book? And I'm like, come on. Of course he wants you to show us how to make money. I can read the book myself, right? So okay, I'm speaking into my headphone, actually. So I said, all right, do you know what? Show us how you make money. So he said, all right, good, I'm going to show you guys how to make money. So he takes the book and he throws it into the garbage. And I'm like, oh, throwing a book into the garbage, man, that's interesting. He said, yep, you don't need this stuff. This is all garbage. I'm going to teach you the real stuff. So we were like, all right, that sounds cool. And then he says, all right, I'm going to give you guys a test. I want to see what you guys know. And I'm sitting there, I'm like, how are you giving us a test? He hasn't even taught us anything. He said, well, I want to see how much you guys know, how much garbage you have in your head, and then I'll help you unravel some of the garbage. So, and sure enough, he did. He showed us some of the stuff, and after the class was over, I just sat there and I was like, oh my God, I'm going to kill it. Because the way he was teaching us was totally different from everything else I've ever learned. And not that I've learned from a lot of teachers, but just, you read a lot of books, you try to get an education through the internet because you don't feel like paying for it, all that stuff. So anyway, to make a long story short, the lesson learned were tremendous. And as Steve went out on his own and he started teaching us, he started improving in terms of delivery and in terms of material and in terms of clarity. And every time he does a session like this and people ask questions, he updates his chart and he updates his PowerPoint to make things a lot easier for us to understand it. So anyway, after I finished the class, I was like, yeah, I got this stuff. So I started trading. And obviously I haven't done the homework by that time, so I was like, I got this stuff down. So I didn't do the homework for about a good several months. And then when Steve came back to teach the class, he's like, did you do the homework? I'm like, no. So anyway, to make a long story short, after he called me out on it, I spent a couple of months doing homework. A month or so, just sat down and I be like a madman. I went back on all the majors. I went back a year or so, and then I just did all the homework. And in Orlando, when I went down to Orlando, I handed him a flash drive with a bunch of other people's homework, and we just handed it to Steve and we're like, here's the homework. And he was, he said, all right, cool, at least now you got it. And since doing the homework, I actually understand the oscillation of the market. That's a word that Ray Jarvis uses, oscillation of the market. Okay, so let me show you very quickly on how to understand the oscillation of the market as it moves. Okay, so on the 1 hour chart, all I do is mark my levels, so I know exactly what I'm looking for, where I'm going with it. So for example, in euro dollar, I'll say, okay, this is peak formation high, right? I know why, because if you look to the left, you see 3 levels going up, right? So I don't want to keep going back, otherwise you'll keep going back. So let's start from here. It starts oscillating up here. Notice how it oscillates right up to the high. Every time it hits the high, it hits the stop, it comes back down, comes back up, induce, and then it comes back and hits the stop, it comes back down. Okay, so I'm watching this and I realized I'm in level 3 because there were 2 other levels from below, from before. Then you see a sharp drop, then you see a consolidation. So what I do is I draw boxes around my consolidation because I can see consolidation easier. Because if I don't mark the consolidation, if I start seeing the drop, then I'm like, oh, that's the drop. But you know, I'm just drawing my box from the low to the high, and I'm just trying to see how it's oscillating within the box. So once it takes out, breaks below my box, then I know I'm in a different level. That's how I look at it. How do you draw the box? Okay, so I know I showed this during the when we were downloading indicators and stuff, so I'm just going to go through this like in 10 seconds, okay? Anywhere in here, you right-click and you click Customize. And on the left-hand side, you will find triangle and ellipse and all this other stuff. You'll also find the box. You select it and you click Insert, and it'll pop up over here, and you just close it, okay? There is 2 texts. One is A, and one is called text label T. Always use the one that says A. The reason for that is because as you scroll the screen, the verbiage is going to go with the screen, not get stuck over here, and then as you scroll the screen, the thing is still over there. Then you're like, what the heck am I looking at? Okay, so that's the purpose of using the A instead of the T. Okay, so you draw these boxes, and what I'm going to do is I'm going to draw these boxes with you so you guys see how to do it. Okay, you can change the color of the box. So for example, if I'm drawing a box right here, originally it's going to look like this, like that. Okay, you double click on it, it'll just drop. You double click on it, you have these little dots on the side, and you right click, click rectangle properties, and you can change the width of the box, how wide, how thick you want the box. And then when I uncheck this, now it's clear in the inside. Okay, it's clear on the inside. And then when I double click it, I can move the box anywhere I want. And once I double click it again, once those little dots disappear, I can't move it. I can move my whole screen. I have to double click to delete it. Okay, so that's how I draw my boxes on the 1 hour chart. Now, the reason this thing is in blue in color, because that's how I differentiate. Once I look at a chart and I know it's blue, for me, it's the 1 hour chart. For some of you, you will be, you know what, I don't like it this way. And that's cool. What you can do is make this black in color. And the reason I say that is because you can shift. You can take this and change it to different time frames. What I mean by that, okay, so for example, let's go through this, how to do this. Okay, so I have my level 3. I'm quick drop. Level 1, I draw the box, it breaks it. I'm in level 2, it breaks it again. I'm in level 3. Now remember, in level 3, market makers are all in, right? And then you see your pattern, and now you're looking at it and like, all right, what is actually happening? Am I going to rise? Am I going to drop? That's the decision you got to make after you view your chart, and you're going to look at it like, all right, man, it's coming up to the high. It looks like it's forming an M pattern at London, right? Railroad track, second leg, boom, you know that's the short. Okay, that's the short. Yes, there's a little head and shoulder pattern, and all you're doing in the 1 hour, just marking off levels. On the 15 minutes, oops, hold on 1 second, let me just bring my 15-minute chart over. On the 15 minutes, you're actually looking at your entries. Okay, now if you take the 1 hour levels and you transpose it, what I'm going to show you how to do that, then you're going to be easily see that you don't have to mark the levels off again. So let me show that to you. All right, so let's start a new chart. So how do you get a new chart? You click Market Watch, and let's say I'm going to take euro dollar, right? If I obviously grab euro dollar and throw it in, it's not going to make any difference. I'm already in euro dollar, but I want a different chart. So you have to hold down the Control key and take euro dollar and drop it in. The minute I do that, it's going to drop in this is how I set my default. So it's automatically going to drop in my black screen, my black chart. Okay, automatically set for 15 minutes. I'm going to change it to the 1 hour chart. Okay, for those people who notice it, these are those little things, either the moving average Granny likes to use. But anyway, I have that set over here. Okay, so now this is my 1 hour chart. I'm looking at this stuff and I'm like, all right, cool. I see now what I'm looking at. It looked like peak formation here, right? And then it starts dropping. So let's line up what we were looking at earlier with what we have here. Okay, so this was April 28th, and this I gotta move to April 28th just to be on the same page. Excuse me while I move the screen. Okay, so April 28th is right over here. Okay, let me shrink it. Okay, so same thing. So what I do is I grab my little thing and I mark it off. And notice what I normally do. I'm going to move this closer so I don't have to keep flipping back and forth here. Okay. See how I grabbed it from here and I pushed it over here? See how I have level 3 written? I can always go in here and I can click A, and I go type in level right up here, and I go in and type in level 3. Now, if I want to make a duplicate and I don't want to keep, and I don't see how I moved it, I can move it. Once I double click on it, the little thing shows up, the little white dot. And if I click the control button also, I can make a duplicate copy of it, so I don't have to keep retyping this stuff. You see how easy it makes it, right? Double click, click control, and grab it. Makes a duplicate copy. Okay, so I got my level 3, and then now I start doing my level 1. Remember, Steve says, hit the stop, drop. I'm expecting hit the stop, drop, and that's what I'm looking for. Okay, I'm in level 1, I'm expecting a straightaway, stop and high drop. Then I'm in level 2, same deal. I'm looking for hit the stop, high drop. I get it right here, beginning of London. I get it again here, beginning of London. Here's something different. Either I could take it or I pass. It's a railroad track. Okay, either I take it long or I pass on it because I'm looking for stop and high drop. So that's how you would look when you're doing your homework. That's what you're looking for. And now once I narrow it down to the 15 minutes, then you're going to see what I'm talking about, right? And then here's my level 3 begins, right? All of this stuff. So anyway, and then there is a reset up here and all that good stuff. So anyway, so what I can also do is I can double click on it. I'm going to bring it down. Now instead of me typing again, I double click, I right click, I go to text properties, and I can change that to 1. You see how I did that? And then I go here, double click, change that to 2. So very quickly I can mark off my levels, and I know if I'm on the hard right edge, I'm right here, and I'm like, boom, I'm in level 2, I'm expecting 1 more day of drop. Or if I'm over here on this hard right edge and I'm looking at it, I'm like, man, I gotta go below this to be level 3, I'm in level 2, I'm still looking for shorts. When it comes out and it hits the stop high from the little M right on the 200 EMA on the 15 minutes, I'm shorting it. So that's exactly what Steve talked, remember? Here's your here's your A, M, A, right? And then it drops and comes back up again, and it does a reset. And I'm sure, you hear more about that kind of stuff, right? So, here we go. Drop, drop, drop. So that's how you would mark off your homework. Now, your entries are going to be on the 15 minutes. So here's my 15 minutes. Okay, this is how I mark I'm just showing you not coinciding with that same thing. So this is how I would mark up my 15 minutes, right? Now, would I like to be more detailed? I could be more detailed. And the reason I'm not as detailed as I used to be, and just let me show you very quickly what I mean by that, okay? Here's my homework, okay? Here's my homework. I have homeworks on patterns. I have a ton of patterns that I have. Okay, open the. Nope, it's open on the other side. Sorry. So I have these different patterns, and and I look at them all the time. I'm like, all right, this is my pattern, this is my pattern, this is my pattern. I keep a folder of patterns, and that's why Steve said variations to the theme. I have them. And then I also have my homework. Okay, here's my EU homework. I have it on the 1 hour and the 15 minutes. Okay, different pairs on the majors. And then I also, when I send it to Steve, I zip it up and I email it to him. Okay, here's my EU, and then it's broken by months. And if you go to any month, I don't know, April, and then broken down. And I'm going to show you very quickly what it looks like when you actually, I apologize. I have a second screen, that's why I apologize. So this is what it looks like. I'm going to blow it up a little bit. You see how it's marked? If I don't see an entry, I don't make it up. And I don't be like, oh, here's the high, here's the chop. I just say chop. I'm looking for the right entries where I can actually see it and I can actually enter the trade. I'm not going to sit there and lie to myself and say, oh, I look at this and I'm looking at that. If I see an M, I'm going to take that trade. All right. And then you see these little zigzag lines. Those are the zigzags that I put in there to know what my bias is, what I'm looking for. So let me show you what I mean. So anyway, you have an idea now that that's what I do. I have all my homework, and I do send my homework to Steve. Okay? They're all lined up. Every month I send it to him. Every month is done. The month is over. I'll send it to him. So I'll send him July next. Okay, you're probably going to receive it in a day or two when the class is over. All right, so that's what you guys got to do. Okay, when I wasn't doing the homework, I had no idea what I was going to do. So that's why you see these zigzags. Okay, so once I identify the peak formation low, that's my head and shoulder pattern. Then what am I looking for the next day? Stop and low rise. After you start looking at this long enough, you're going to see here's your W pattern, man. It's early. Here's the stop hunt, first leg. Second leg is railroad track. I missed it. I was sleeping. I come right here, and I see it, and I know that that's what's going to do. This direction, I go long. Right off the low, I study the pin bars, right? That's a stop on pin bar, and I go long. So that's why I would mark my entries. See, it comes back, it touches, hits the stop. Steve will talk about something called a 50-50 bounce, maybe, right? 1350 cross, retest, and then boom, gone. You get a minimum of 50 pips on these bounces, and then once I'm in level 3, see that's the big fat M, then I'm looking for shorts. Okay, let's say I saw this personally because I've been looking at these charts for a while, and that's why my zigzag tells me here's my peak formation low, here's my V, and next day is also my V. I'm looking for a long, which I did take right here off that pin bar. Okay, it went up about 58 pips. You hit your target, man. You're done. I'm done. Once I hit my target, I'm done. I go to sleep. I don't try to trade that short and try to trade that long and try to trade that short. I mark this off because I know I can do it. I can trade both ways because I'm in level 3. And that at one point, you're going to get to that point. And then you're like, oh, I got it. All right. And then it comes one level down. It forms this chop. There's no trade. And then all of a sudden, it starts heading back up. And you're like, wait a minute. I'm level 3 and supposed to go down, but it doesn't do it. There's a reset. Okay. And you're going to figure that out when you start doing your homework, that the reset happens because you see these drops. On the 15 minutes, you're probably in level 3 here. You see, W pattern. It'll come back up one level, and then you're going to get a reset. So usually in level 2 on the 1 hour, you're going to get a reset on the 15 minutes. Okay, so when you do your homework, you'll find it. That's why these things happen that way. All right, it'll do a reset, and it'll start heading back up again. And you're like, what the heck is going on? And then once I know that, I'm looking for stop and low. Here's the big fat W, or 3 hits to the low, peak formation low. I'm expecting stop and low rise. Next morning, quarter wood. Maybe I'll blow it up a little bit. You guys can see it. Here's my W pattern. I'm looking for stop and low rise, level 1. Next, I normally don't trade a counter trend trade. I mark them off, but I don't take them. Okay, that's something very valuable I learned in the New Jersey class. You know, take one trade. You can see 3 swipes to the low. 1, 2, 3. This one did not go below that, right? So this is the third one, and then hammer, and then it's gone. Nice quarter wood. You could have gone long here. That's over, man. You just enter on this one. It's over. It's done. Okay, same deal. I'm still in level 2. Can you take a short high? Yes, but your better trade is stop on low rise. Here's a beautiful W pattern. Can you see it? And then it's over. Now you're in level 3. Now you're looking for shorts. Here's the big fat M. I took the short right here. All right, and now I'm in level 3. I can trade both ways. Okay, if you're not clear, like if you notice I didn't mark anything, I didn't see anything clear, I didn't take any trade. Right, when I woke up, I'm too late. I'm in level 4. I'm like, I don't know about that. But isn't that quarter wood the same quarter wood over here earlier when we saw it? Right here, right off here, see? Doesn't that look the same as that? I know when I'm scrolling the screen, I apologize, man. It gives me a headache too. The same move, same move. You take that long, 40, 50 bips. You probably hit 50 bips right up here. And then notice, it did a head and shoulders pattern. When you wake up, you know you're an extended stop and you're in level 4, which normally doesn't happen. You see a head and shoulders pattern. You see pins to the high. You see little railroad tracks and pins to the high, pin to the high. You know this is going to drop. Okay, at some point, you're going to be able to trade intraday levels. 1, 2, 3. It's the same thing. Variations to the thing. I know this thing is going crazy. Sorry. Let me just look at some of this. Do you draw the short lines? How do you draw the short lines on my MD4? Only can draw a long trend line. What do you mean short trend line, man? You just take the trend line and draw it this way. Just draw it downwards. Right? So like this, I'm expecting stop on like that. Right? So that's what I would mark off. Hit the stop high drop. Boom. Hit the stop high, drop. All right. And then I'm in only level 2, now I'm in level 3, and I'm expecting it to do something else. And then, okay, so I woke up, I'm right here, I'm like, dang, I'm in level 3. Okay, I missed the short, I missed the stop one, I could have taken this right here, or I pass and I wait and I see what happens. All right, how did you get the painted blue box? Painted blue box? The blue box comes with the indicators, man. It's called the work time. You see indicator list, and in the indicator list you see all I have is my moving average, ADR, daily high low, work time, and the moving averages, and then I just kind of have my TDI sitting at the bottom over there. I don't really use it. I just have them it for show and tell, just in case I have to explain something to somebody that really needs the indicator. Then that's when I actually do it. All right. Oh, ES. ES is an extended stop. So also Empire State. That's an Empire State pattern. Sorry. If you look at the ES, it's like an Empire State, right? This is the antenna of the Empire State Building. My entry is right. Usually I would take it right off that pin, but sometimes I'll take it right off that. You see how it does it? It does it again right here. That pattern and that pattern, you can grab it right off here. But normally I'll grab it off that pin bar, and then that'll be 50 pips, and then I'll grab it again. This one coming back inside, and I'll grab that move both ways. All right. Yes, I will uncheck the ray box so that you see when you have like when I'm drawing the trend line, for example, right? Normally your trend line has this thing called ray. When this ray is checked off, this thing goes to kingdom come. So in order for you to do it, you double click on this line, right click, trend properties, go to parameters, and uncheck this. So it's only as long as you make it. Okay. How do you get the gray boxes at the shift change? The gray boxes are, you know what? This gray box is like, instead of the red box you guys have, the US session, I just changed that to a gray box. Yeah, just slight subtleties to it, but normally you would have your shadow boxes and stuff like that in there. Okay, this is just an older platform, and this is just how I'm used to seeing it, so I just haven't changed it. Thank you. Yes, I'll be happy to go over simple stuff, because believe me, what you guys are going to go through as newbies, I've gone through, and I understand where you guys stand, and I came from where you guys came from. So that's why I'm always willing to help. All right. And study, see, when you're looking at this pattern, I'm in level 2. Mark it off 1, 2, 3 swipes to the high. If I showed you my homework, I would have this. Now I don't, but before I would have this marked off as 1, and I would just mark it as 1 right there, like that, at the candle, next to the candle. And I would mark this as 2, and I would mark this as 3. So now you can see 1, 2, 3 swipes to the high, railroad track, and my entry is right the minute that railroad track closes. Why? I'm expecting, based on my little dashes, I would draw these before the session start, and I'd be like right above the Asian high, like Steve says, right? It's about 20 pips above the Asian high, maybe a little bit more, all right? Sorry, about 20, almost 25 pips above the Asian high, all right? Right to the pin is right up here. That's what you're looking for. Railroad tracks, hit the stop, induce long, trap, and then you're ready to go. And it's over, man. Once you take that trade and this thing shifts, it's over. You're already up like 38, 40 pips. And the next candle comes, it's done. All right. How long did it take? It took me about almost, let's see. I started doing a lot of levels around September, after the May class, so it's about three odd months. Took me about 3 odd months to look at the levels. And the way I look at levels is just not like, oh, just a drop here, because sometimes you see, oh, that's my lower drop, then you think, oh, that's the next level. No, that's not it. Like Steve says, right? If for example, one day I'm looking from here to here, and I say, okay, that's 194 pips, I'm looking at my ADR value. Remember, Steve says you break it up approximately, not a science, right? Approximately, you take the ADR and you divide it by 3. So it'll be roughly about 50 pips each move, each push, right? About 61 pips. And then the next level starts, and then it's about, this is a little bit smaller from the bottom here, and then this is a little bit bigger. Okay, it's 100 pips. So again, usually the second push is smaller. Why? Remember, Steve says, absent of market makers, they just want to see how low you push it, and then they say, all right, enough, man. Let me just pull it back, hit the stops of those guys who did take the trade. You know, there's some stop put over here, because why? You see this push and it pull back. You see this pull back here. People will jump their stops over. You think, I don't want to lose too much, so you just move it from here to here to grab 10 pips. They move the stop right above here. They come in, absorb them, hit the stops, and then they continue the merry way. They always hit the stop one more time before they move. So, you know, if you identify where the stop hunts are and line it in the direction of the market maker trend, and then you draw these little zigzags, you're saying, man, I know where I'm going to go next day. I'm going to hit the stop high drop. Now I'm in level 3. I'm waiting for the stop hunt low rise. Okay, if you start looking like this, like all garbage, then you think, you know what, I'm going to pass on this. Then you see these railroad tracks, and you're like, man, I know what these guys are going to do. They induce short below previous day's low, trap them with a nice hammer, comes right back in. I'm in here, my stop goes right below the low. Now, again, whatever you're comfortable with. Some people don't like such big stops. Okay, like me, I don't like very big stops, so I may pass on this trade. All right, and then I know news is coming out, so I may pass on this trade altogether. I'm like, you know what? I'm going to pass on this trade, man. It doesn't look like it's there's news coming out. They may hit the stop one more time and all that kind of stuff, and I have a 30-pip stop. I don't like it. Okay, and that's your prerogative. But knowing which direction you're going to go is tremendous. Like if I say, okay, this is a big fat W. Next morning, I'm looking for stop and low rise. Boom, take the 2 pins, and I go long right off here. There's 60 pips. Right? 2 pins, Steve will talk about that. 2 pins to the water, 2 pins to the Mayo. Okay? All that good stuff, man. Here's actually a W pattern right here. You can trade any session as long as you do your homework on the session. Okay, so to be clear, if you're trading London, your homework should be focused on the London session. If you're doing New York, you should be focused on the New York session. I'm not saying don't mark off the levels on London. I'm saying your focus. I'm focused. My focus is in London session. I don't trade New York too often, so therefore I don't take these reversal trades. I mark them, but I don't take them because I'm not usually trading at the time I'm sleeping. So whatever session you're going to mark, make sure that's the session you're going to trade. So for example, I see this big M pattern, I will go short right here. And then once I identify 2 pins, I'll get out of my short position and go long. Why? Because that's how Steve taught me, trade both ways. Market makers trade both ways. You're trading the pattern and you're understanding the harmonics, the oscillation of the move. And that'll come with time. I know this thing is flying right through, man. Pushes and levels are the same. Yes, I call them pushes. Intraday, when it's happening within the day, I call them pushes. And when it's happening in multiple days on the 1 hour chart, I call them levels. So that way I just distinguish between levels and pushes, because intraday you have 3 pushes, right? So for example, the 33 trade on the last day, in level, moving towards level 3, you see 3 pushes, and then it'll go to the peak formation high. Okay. Okay, when Steve is going to take care of that. Okay. Okay, what else? Oh, how do you so let's say, for example, we did this already, right? This is my 15-minute chart. Nope, that's euro pound, sorry. Here we go. So now, once I mark this levels off, right, if I want to change to the 15-minute, or I'm going to save this. I'm going to go to my profile. Now I have my levels on the 1 hour. I'll go to profiles. I'll go save as, and then I'm going to select a profile, whatever it is, euro, dollar, whatever. You just call it euro, dollar, 1 hour, right? I save it. Now I have my 1 hour profile on the levels. Then all I need to do is click 15 minutes. All right. And as you can see, everything is already marked, man. I don't have to go mark them off again. You see, everything is there. All my levels are marked off. I don't have to go and, oh, what level am I in on the 1 hour? Nothing. I already know exactly what level I'm in. Okay, so maybe this will help instead of you marking the levels off twice. And how do you change it from one platform to another? So let's say I marked it off in Alpari and I want to shift it to MIG, right? It's an interesting process. What you do is, let's see. Okay, they're actually right over here. I'm going to move it right here, and I'm going to move it right here. All you need to do is you right-click, Properties. Okay, under Shortcut, you go Open File Location, right? And you do the same thing for Alpari. Right-click, Properties, under Shortcut, Open File Location. The reason I'm going a little fast is because this thing is recorded, so you guys can go back and look at this stuff. And this way it'll also save you a lot of time, all the profiles and stuff. You don't have to do it for every single platform, because the reason I have multiple platforms is because I have multiple screens. I want them to all be opened at the same time. So I'm looking at different things at the same time, right? So if I'm doing my homework in one and I'm trading in the other, I want to be able to see them. All right, so I don't have to keep marking the same thing 20 times. And then all I need to do is I'm like, all right, you know what? I save my thing in profile. I go to profiles. And I'm like, I found it right here. It's euro dollar, right? So I just grab this and I just throw it in. Same thing over here. I go to the profiles. My euro dollar is right there. Boom, I grab it here and I just chuck it in here and boom, it's done. So that way you can transfer to multiple platforms. You don't have to keep doing it over and over and over again. Okay, so these zigzags are amazing. Okay, what they do is they kind of keep you in line. So if you know here's an M and you're looking for V and you're looking for V, then you just kind of draw these things and you just say, you know what, I'm looking for this, I'm looking for this. I'm only trading in line with the peak formation. If you do that and don't take counter trend trades, you're probably going to be right off the bat 80% accuracy. If you start trading counter trend trades, because why? Because when you're trading counter trend, you see you took this counter trend, you kind of went sideways for a while, your 2 hours will pass and you're like, dang, I didn't make any money, man. But if you're trading in line with the peak formation, boom, it's over. It's the 100 pips. From here to here, the 100 pips is over. You go to sleep. Don't try to trade it back into the range. You could. Then Steve is going to yell at you. Time, leverage, and freedom. That's what you're trading for, right? Let's see. How low below consolidation is the level? On this example, I see levels clearly, but when they are big, but when I see small ones. Okay. You know what? Let's look at this, man. This is how many pips is this? 118 pips, okay? This is about average euro dollars, what, 150 pips? Notice the ADR. Rough. It's not like 100%. I mean, I even took it, if you actually take it, if you really want to be anal and be like really accurate, just move it all the way to the bottom. And now you go from the top to the bottom of the range, it's about 130 pips. You go from the top to the bottom of this range, it's about 180 pips. My ADR is about 150 pips, right? So that's how you do it. You just measure from the high to the low, 175 pips. So now I know this oscillation is just an oscillation, but it's not a new level. I'm just going from the high to the low, and I say, man, I'm 180 pips. I'm right around my ADR value. Maybe that helps. Hopefully it helps. Can you explain how you determine how to draw the zigzags? Good question. How do I draw my zigzags? Well, once I identify my peak formation high or low, for example, here's my peak formation high, right? Here was an M, and then they did an extended stop hunt, right? Again, if you can't see it on the 15 minutes, okay, I'm going to go here, and I'm going to show you something cool. Like Steve said, you can go to the half hour. Then you can start seeing stuff that you've never seen before. You're like, oh my God, look at that. Beautiful Empire State pattern. Actually, evening star pattern, right? You know that thing's going to drop. 2 pins to the water, that thing's going to drop. Things like that, you're going to start seeing it. Obviously, the more time frame you look at, sometimes you get more confused, but sometimes it helps. Right here, the big fat M, second leg of the railroad track with a high test candle. Things like that, you're going to start noticing. Now, how do I draw my zigzag? Well, once I identify my peak formation, I say, okay, here's my peak. What am I expecting next day? Hit the stop high, drop. Okay, cool. So I mark it, hit the stop high, drop. Or it comes right here and it hits the stop. I'm only looking for shorts, in other words, right? Once I identify my peak formation, I'm only looking for shorts. I can take this short, I can take this short. Now I notice 3 hits to the low. Why do I say this? It looks like a reset. That's why I drew it. But theoretically, this came right back into level 3. This is all level 3. This is all level 3 oscillation. Okay, that's why when it did that, 3 hits to the low, you could have gone long right here. Is the stop too big? Yeah, it is. You know, but whatever you're comfortable with, and it just took off 150 pips. Okay, so that's how you would draw your zigzags. Once you identify the peak formation, you know MVV, or I'm sorry, MAA, and that's why you draw the zigzag like that. And if you see a W, and then you're going to go WVV, right? Here's my W pattern, here's my V, here's my V. Right, this is an extra day. Why do I know this is an extra day? Because I'm in this level 2 oscillation. I'm expecting it to go to level 3. So I can take this long, I can take this short, but the better trade is to the long side, because I need to clear this level in order to go to level 3. And that's why I can take an extra day of a V. Okay, how do you copy text without hitting the A and typing the text each time? For example, if I'm here, I double click on it, I click the control button, and I can just copy my text without typing it. Right, so for example, I write enter a lot, right? So instead of me typing enter here, I just double click on enter and I move it from here to here. You see, really easy. Double click, create a double click, click control, and move it. And it'll just keep you keep creating a duplicate of itself. Okay, is there a program to copy the screen and some instructions anywhere? I don't know what that means. What are the red dots? The red dots are something that Steve used to teach us from before. They're called scale-ins. He doesn't use that now. I personally use it because I did my homework on it, and I use that as momentum shifts. That's all I use it for. I don't trade off of it. So these little dots are all over the place, but I know when the dot is valid and when the dot is not valid. Okay, it confirms my pattern, and I trade that kind of stuff. So when I see it confirming my railroad track, then I know I'm going to go that way. What else? Is your work available on the forum? Well, now it is, because now it's kind of, you know, you guys are going to actually have this recorded. And then every Sunday, we do a session where we go over levels. And hopefully you guys will be able to join us. It's a free Sunday session. Ray and myself will do the levels. Every other week we kind of shift. And then we get guest presenters. So We have swing traders, and hopefully Ricky will be here soon, and we had Masood a couple of weeks ago, and Kim and Granny and Jim, and there's a whole bunch of them, Gary, and so we have a lot of very experienced people showing how they actually trade, and so you're not by yourself, okay? What time Sunday? Sunday is usually at 6:30 p.m. Eastern. Why is it Eastern? I don't know. Ask Steve, man. Steve is on the Eastern side, so that's why we do it Eastern. Why do you save the picture to send off to Steve? How do you save the picture to send off to Steve? Okay, once you save it, that's a very good question, right? So let's say once I saved my homework here, right? And what do? I right-click. Okay, I'm going to say, you see the word that says send to, and I click compress. It'll form the zip. It'll create the zip for me. It'll zip it, and the zip is the one that I can attach. These folders I cannot attach, but the zip I can attach. Who's the presenter this Sunday? This Sunday we do not have a session. This Sunday we do not have a session. Last Sunday I mentioned that, and I'm going to put it in the forum also. Next Sunday we will have a session. Okay. Meg is better than Duke is. Yeah, that's the right answer. Does MT have a button to capture the chart? Yes, actually you do. MT4 does. So for example, if I want to capture this chart, I right click and I click save as picture. And then once you click save as picture, active workspace, active chart. So let's say for example, if you have a trade on, you click active chart, it'll show you a little trade window at the bottom also. But if you're doing homework, just click active workspace and click OK. It'll actually save it, and it'll look exactly like this. It'll look exactly like that. Whoops, yeah, like that. Okay, then you'll be able to see all the markings and what actually happened and all that. Where my entries are, notice all of them are in one direction, in line with the market maker trend. Long, long, long. Once I'm in level 3, then I'm looking for shorts, shorts, shorts. It's really simple. I mean, Steve has really given us a real good gift. It's a beautiful gift, and but you have to do the homework, man. If you're not going to do the homework, you're not going to have the confidence in the methodology, and if you don't have the confidence in the methodology, you will not be able to pull these trades. Then you'd be like, oh, I'm going to go long here, I'm going to go short here, I don't know what the hell is going on, I'm all confused. When you start doing the homework, you're like, man, I see it, I know this is what I'm looking for, I know this is what I'm looking for. And if it plays the game the way you want to play it, that's when you actually take the trade. Let's say I'm looking for stop and low rise, and it just starts dropping from here without this stop hunt. I'm like, man, that's not my trade. I'm looking for stop and low rise. And when it does present, that's when you take the trade. So in other words, like poker, not that I play poker, I've never played poker, but talking to my buddy Bruce, he says, in poker, when you're given a hand, right? You look at the hand and you look at it, you're like, yeah, you know what? This hand is a crappy hand. I'm not going to play it. And you fold. You keep folding until you get a very good hand, then you play. Why? Because when you play a good hand, you have a very good chance of beating the house, right? If you have a crappy hand, you're not going to play it because you're going to lose. So you just keep folding until you actually get a good hand, and then you kill them. Then you're like, you know what? I'm going to kill these guys. I got a good hand. That's when you actually bet the big bucks, like Steve is telling us. Notice I had 3 swipes, right? 1, 2, 3, and then there's your W pattern. Second leg goes below the first leg and closes right back inside. You enter right there. Your stop is literally just the pin. That's the gift, man, knowing what to do at the extremes. I'm not taking the trade in between. Can I take the trade in between? Yes. I've seen this enough times. I know how to trade these things. But not everybody should, and most newbies cannot and should not. That's why you don't see me normally take these trades in between. Okay? Very seldom I'll do it. I'll do them. If I get up and I miss the move and I'm like, man, that's only push 1, I'm going to take him. Okay? Are the patterns in the forum? No, the patterns are not in the forum. Steve actually talks about these patterns. You know what the best thing to do is? Steve gives you a list of patterns. The best thing is you look at it, and if you want, you can send email to Steve, or or just post it in the forum, or you can just send it to me, whatever. Then we'll be more than happy to help you out with that. You call this homework, but is this what you do when you trading? Yes, 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 yes. Yes, that's how you see and you build confidence. When I'm actually trading, if you notice, this is I look at this chart, by the way. It's not like something I just, do and then forget. It's on the hard right edge, man. It's marked. I just haven't completed the thing yet because this is like that. You just draw it. Bang. That's one level. Right? It's all part of level 3 oscillation. But yes, these are charts that are marked up right all the way to the hard right edge. Okay. Do I need indicators to do homework? You can. My TDI down here. I used to do that when I first started trading. When I first started doing my homework. Let me just quickly show that to you guys. When I first started doing homework, I was using TDI because I was, new. So here's the previous homework, right? So on the 15 minutes, I had, I'll show it to you. See, I had it marked. Okay, here's my entry. Here's the scaling. How did I scale in? I had my TDI down here, M patterns. When it crosses, Steve will talk about that. I don't want to jump ahead, but notice he'll talk about these things, and you can use the TDI and you can mark them up as you do your homework. Okay, you're lining it up, and if you don't see a pattern, I write chop. Level 2. Before I used to mark my levels instead of boxes. I used to mark it with these dashes. Okay, now I'm more, now I know a little bit more about this boxes and stuff like that. So I just kind of like I would draw a box right here. Okay. Good shit. Okay, good. How do you do it? What do you do with resets? What do they tell us? Do you restart the count? Yes, the resets are usually, for example, I'll give you a quick example, and I think my time is up. So I'm going to show you something interesting here for those people who kind of stuck it out to the end, right? So, for example, I am here on the 1 hour chart. Okay, so I'm looking at this level 2 right here. This is May 11th. Okay, so I'm going to go and drop it down to the 15 minutes, May 11th. And I'm right here right now. Okay, so now drop 1. Okay, you would have said this could have been drop 2, this could have been drop here, the big fat W back up here. Here's your, it looks like a reset right up here, right off the 15. You see it? Right? And then you see the move, the shift, and then it drops from there. Right? You can go drop, consolidate, hit the stop again, drop. One more, and then you can start seeing your sort of like a head and shoulder pattern. Shoulder, head, it's ugly. It's not clean, right? And that's how you're going to see it on a shorter time frame, on a smaller time frame. So usually on level 2 is where you're going to get your reset. Right? It continues coming down, and then that's how you're going to. But if you draw it also, the 1 hour superimposed on the 15 minutes, you can actually see them better. All right, but it's actually 1, 2, 3 with a second leg over here. See that? That's the big W pattern with a hammer right to the low. It'll come up 1 level, it'll reset, and it'll start dropping from here again. Okay, so that's what I'm talking about. So you'll be able to see these things. Usually in level 2, you'll find your reset. But in other words, like Steve was saying, momentum is to the downside. It costs money for them, and they don't want it. With the sentiment already created, they don't want to cost them any money. So they're like, oh, you know what? You give your bias to the short side. I'll make my money, come back, make my money, and then let it drop again in the direction of the sentiment. It costs them no money. They'll sell. At some point, they'll pull it back and book profits. That's all it is. Oh, we are brain. Okay. Okay, let's see. I missed how to stick the text to the chart. Oh, just use A. Use A instead of the T, and you'll be good. Okay, just use A instead of the T. If you use A, it'll stick with the chart. If you use T, it's going to move. Glory, hilarious. Your dog has to go to the bathroom. All right, guys, I'm going to end over here. If you guys have any other questions, my email, you can find my email in the forum. Just shoot me a couple of emails. I'll be happy to answer them. Catch us on Sunday. You'll learn a lot of stuff. Ray is fantastic with levels, and we'll be happy to show you some of the stuff we know, okay? All right, Steve.
All right, I think I got it back.
Thank you.
Everybody hear me? Okay. All right, look, and everybody's tired. We went long. Thank you, Carr. Very, very fantastic presentation. That's how you're supposed to do the homework, man. That's how you mark up your charts. All right, so I know you're tired. Go to bed. But tomorrow I want to see a GBP/CHF chart. GBP/CHF. Go back a couple of days, a week, whatever you feel compelled to do. Thanks, Bruce. Mark it up for me, kind of like Carr did. Identify peak formations, levels, market maker trap moves, all that stuff we talked about, all right? Start trying to tie this stuff together in your mind. All right, there's no session this Sunday because you have the recordings for 2 weeks. And the weekend is a good time to spend working on the recordings and getting caught up and then immersing yourself in the live market and watching the charts. All right, thank you, Wayne. You guys ready to get out of here? That's it. GBP, CHF. Go back a few weeks, mark up some charts, send them to my inbox. Veterans, don't send them. I got enough from the newbies. All right, good night, everybody. Thank you. See you tomorrow, 6 o'clock sharp, Eastern Time. Good stuff. Thank you, guys.
Thank you.
Hey, good night, everyone. It was a great class. Appreciate. If anybody has any questions that we can help with, please let us know. Send us an email. Give us a call. We're here for you. Good night, everyone.